How to consistently grow a small account. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. I got to get this out of the way. A risk disclosure. We're not financial advisors or a broker dealer. What you're going to learn in a minute, if you're brand new, is that I was in the professional trading world, but I've also spent time in the brokerage industry, hence why I throw this up here. Next thing, copyright disclaimer. This is ours. It's not yours. And a key point that I always make, okay, whenever I do a presentation, if you need to get a hold of us, okay, and specifically me after this evening, okay, I am available via email, and you can just shoot an email to support@theotrade.com. Put my name in the heading. Just put, hey, this is for Don. It will get to me. And it's important to me that you guys know that you can always reach out and trade-related questions and so forth. By the way, TheoTrade, we are based in Scottsdale, Arizona, because I did my time in Chicago and I am done with it. I'm actually broadcasting, though, this evening from Payson, Arizona, which is a really small mountain community, about an hour and 20 minutes outside of kind of central Phoenix. So it's a nice place. Hey, if you're going to be quarantined, don't knock it till you tried it. If you're going to be quarantined, it's a good place to be quarantined at. Sequestered, quarantined, what are we calling it these days? So if you need to get a hold of me right there, support@theotrade.com. Next on the docket, this is why you're here. Listen, anytime I do a presentation like this, literally anytime I do a presentation, I want you to be able to walk away with something that is, it's not just useful, that you can actually take to the marketplace literally tomorrow. So a new skill. A few of the things I'm going to be discussing tonight. Number one over here, why traders and investors alike outright fail with many of the strategies they embark upon. So we're going to talk about a little bit about strategy. We're definitely going to talk about what we term trade logic. I'll explain more of that in a moment. Number two, why you need to be cutting risk. Cutting risk is absolutely critical. I'm going to describe not just, hey, you need to cut risk. I'm going to show you specifically how to cut risk. And on the flip side, how to produce much more consistent 55% returns surrounding really high probability movement. We're going to talk extensively about movement, okay, of the marketplace and not necessarily just what you think is about to happen. Number three over here, learn to grow an account with high degrees of consistency, even in a world filled with volatility. I would definitely say that volatility is in play right now. And number four over here, how you can trade without having to continually monitor the positions. So we're going to use a number of what we term set it and forget it order types, okay, with a really high probability strategy. And that's what you guys are here for tonight. This is going to make a lot more sense as we start to dig a little bit deeper. But again, I'm going to give you some definitive areas that you can take away, that you can use immediately tomorrow. All right, next, our gift to you. Listen, tonight, I'm probably going to be a little over an hour. Is that all right with everybody? Because you know what? I think we're always scheduled for an hour, but I let everybody know right up front. I like to answer questions. I like to make this a very interactive session. And because of that, I tend to run over a little bit. So I'm going to be a little bit over an hour. And as a gift to you for staying until the end of the webcast, we're going to provide you the SPX expected move indicator. That's my baby. It's $197 value. It is worth it. Okay, what is it? And I'm going to explain that in a second. It's an SPX expected move indicator. Again, stay with me right until the end of the webcast. At the end of the webcast, I will give you a link. That link will have, okay, this particular indicator. What it is, they're all hand calculated expected moves. And it's literally an indicator that changed the way that we view the markets. This is what it looks like. And I'm just going to, I'm going to spend a second and detail it because I think it's that important, especially in this marketplace. What you've got over here is it says weekly expected move. They're ranges, right? I'm showing you a range. Like right now, okay, there's three little lines on a screen that I just drew on the screen. Okay, it's an upper range, okay, a central range, and the lower range. Effectively, this line in the middle, that's just where the week starts, okay? The upper level and the lower level, those are defined by the options marketplace. So what this actually does is it uses the options marketplace in the SPX to kind of handicap what we're going to look like this week, next week, okay? Every week, Okay, every week you can actually take a look at this and you can say, all right, what's the risk, higher or lower? And what you'll find is we adhere to these particular levels, and they're really tradable levels. And I think that this week is an absolutely critical example because we broke outside of the level and pulled back in specifically today. The other aspect of this indicator that's of critical importance, okay, the indicator also displays like that right there. If you take a look, that highlighted candle, that's what they call a breach of the expected move. So what it's actually telling you is how efficient or inefficient the marketplace happens to be. And right now, okay, the marketplace is screaming, not only am I dangerous, I am Mr. Toad's wild ride. And you're like, well, newsflash, everybody knows that. Yeah. Did everybody actually know it back here in early January when we started actually breaching the expected move? And it's this is, again, phenomenal, okay, information over here. We were already breaching the expected move before, okay, all of the chaos fully gripped hold. And we did it, again, 5 different times. There were warning shots being fired because the marketplace could see risk effectively coming. And it's, again, very important indicator. We are going to provide that indicator directly at the end of the webcast. As I said, stay with me right to the end of the webcast. We're going to give you a link to it. All right, a little bit of housekeeping. I think we got everybody kind of tuned in right now. So housekeeping. Okay. Tonight, this is skill set. You're going to learn a lot. And I'll tell you, you go to a lot of different webinars here. They fire all kinds of stuff at you. Okay. I am going to bombard you with a lot of trade logic. I am going to put up some specific trades. And I'm going to tell you, I have tendency, and I hope this is okay with everybody, I shoot high, meaning that I'm going to fire a ton at you in the next hour plus. Okay. I say shut the door, turn off Skype. I do. Chat, whatever else might be distracting you. Listen, we're all sequestered to our homes. Okay, this is probably going to be better than watching Netflix this evening. You've already been through the entire Netflix catalog. Close Facebook, put the phones on silent mode, kick out the kids. Listen, I'm in a similar situation as everybody is. I've got 3 kids downstairs that are young. You know, I got a 5-year-old, 7-year-old, and a 10-year-old. I'm in my mid 40s over here. Oh, there's nothing like not having school to throw them out. Okay. But listen, you took the time to be here. Stuff's important. Focus on being here. And it is important to me that you guys understand this is going to be fairly deep. This is a little bit about me. So I watched order flow for 15 years. It's a really big portion of why I'm here. And by the way, whenever I say that, I watched order flow for 15 years, people go, I don't even know what order flow happens to be. I watch trades. Listen, little background on me. I actually grew up around traders. I had an uncle that traded in Chicago, and he started trading in Chicago in the 1970s. And he actually went to work for a firm in the 1970s, and they said, man, this guy's smart. They actually they started a firm together, and the firm grew from literally 1 seat on the floor of the Chicago Board Options Exchange. Within 7 years, he owned over 500 seats on exchanges worldwide. The firm is called O'Connor & Associates. It was actually bought by the Swiss bank in the early 1990s. I grew up around traders. So in the late 90s, I actually got involved in the marketplace. 3 weeks out of college, I went to work in Chicago. So that was 1998. By 2001, I was invited to a startup brokerage firm because I kind of thought, by 2001, the trading floor was dying. Standing down on a trading floor screaming and yelling to make money is not exactly what I had in mind. I happened to do a degree in molecular genetics. Next thing I know, I'm standing on the floor screaming and yelling. So I went to work for this firm called Thinkorswim. Nobody knew what it was. It was in 2001. I helped Thinkorswim go public in 2007 and actually built the entire education division of Thinkorswim. Then I went on to actually run all of education for TD Ameritrade. At the time I was there, we had 7 million clientele, and I exited TD Ameritrade. Again, after we took Thinkorswim public and TD Ameritrade bought us, I finally exited in 2015. And that's a little background on me. People always ask, what's watching order flow? Listen, that just means I could see and access everything you did. So I ran education for a group of 7 million clientele. Okay. We studied everything that you did. Everything. Okay, and they still do to this day. What that basically means, we don't look at like individual accounts and look at like, hey, Joe, what are you doing in there? Sure, we looked at accounts once in a while, but we use big data. And we said, if people do covered calls, do they make money? If people do iron condors, do they make money? Listen, we learned everything about retail traders you possibly could. Okay, we learned, all right, literally from watching billions of dollars of others' mistakes. We know exactly what worked, exactly what doesn't. Okay, and with that knowledge, well, a lot of that is what I'm going to display here to you tonight. But that's what it means to have watched order flow for 15 years. And again, it's a big portion of why I'm here. This is actually, this is me. I still do a lot of TV. In fact, I've got a broadcast I'm going to do tomorrow from Payson, Arizona, live. This is actually in studio at TD Ameritrade studio. This is actually a CNBC broadcast. I try not to do CNBC too much. It's just not what it used to be, not for me anyway. But this is one of the most memorable. It's myself versus none other than the premier shark himself, Kevin O'Leary. I was the short, he was the long. Okay, the next 6 months, Apple did nothing but sell off at this time. It was great. It was great. It's memorable stuff. By the way, I'm going to ruin this for you. Kevin O'Leary could not be a nicer guy, right? I figured somebody needed to know that. All right, with that, okay, right now, I kind of feel like people are having a tough time to get knocked around by volatility. That true? By the way, again, this is an interactive session. These are not the rhetorical questions. Jump in anytime. I feel like a lot of people are getting knocked around by volatility. Volatility, okay, shouldn't have you down. You should be excited about it. This is it, people. This is the time. Volatility is an absolutely massive opportunity. I'm going to say that again. This is it. This is the time. This is, like the golden age of trading. And I'm actually going to start off this evening by showing you a couple of trades. What's possible in the extreme. So all I'm showing you here is, and if you've never seen this before, this is what we call a 5-day net liquidating value. Okay, what a 5-day net liquidating value effectively does is it says, all right, by the way, I know it looks backwards. This is just a screenshot directly from my trading account. And I want to reiterate to many of you, okay, that I am from, the TD Ameritrade world, and this happens to be a screenshot of the Thinkorswim platform. You don't have to be on that, and I want you to know that, but I'm from the brokerage world, so kind of makes sense that I still use it. Anyway, I wanted to show you a couple of screenshots of my account and values of here. By the way, throughout the course of the evening, I am going to show you a ton of trades. I do not talk about, anything that I'm not willing to put capital forth to. Everything that I do, I trade with my own capital. This is not, TheoTrade capital here. And I'm just showing you one account. I went on a great run. The account that I'm showing you here right now, this happens to be an IRA account. This is actually a run where I went from, this is February 23rd. Okay, to February 27th. If you want to know what's possible in this business, this is what's possible in this business. I went from $211,929. Within 1 week was at $248,000 and change. Okay, the following week, and I wanted to show you, again, or I should say the following month, the exact same account. You can see I'm at 305, actually jumped to 308 that particular week. But this was a fairly spectacular run from late February, ultimately until late March. And I just wanted to detail that because constantly people are like, I'm getting knocked around in this volatility. I mean, people, this is it. This is what, as a trader, this is what you look for. And I'm actually going to show you something really interesting in a minute too. By the way, here's a separate account. I want to clarify this. Again, this is a separate account. And this is also very recent trade. But I had somebody ask me the other day, what does a week look like? So, by the way, this happened to be a Saturday or Sunday, but this is actually what a week might look like to you. So this is actually closing on a Friday. This is Saturday, a Sunday. This is a Monday. This is a Tuesday. This is the kind of deviations you should see. So this is running from about $699,000, up to about $714,000. And again, all of the capital in here. It's my account. I'm going to show you a ton of screenshots. The other thing I wanted to show you was a few trades to kick it off. So this is what's possible in terms of P&L in extreme volatility. Okay, here we actually have a trade that I'm going to talk about also a little bit later. This is a volatility-based trade. What you are looking at, and again, I wanted to acquaint you with this because you're going to see a lot of these screenshots throughout the course of the night to drive, okay, home the point. Not only do we trade very, very actively. This is a trade, by the way, is this recent enough for you? This is a trade from April 24th, and I want to detail the exact. This is April 24th, 2020. The trade was placed at 9:12:08. This is Pacific time. The trade was actually closed. Again, this is an opening position. This is a closing position. Trade was closed precisely, 5 days later. I put this on. Okay, this is what we call a back spread. I put this back spread on for a 43-cent credit. Meaning I actually put the trade on for 43 cents. I get 43 cents. I closed it for a $4.97 credit. Okay. These trades are everywhere right now. I mean, the back spreads, this is where it's at. And I'm going to talk about this a little bit later this evening. I'm just kind of curious, how many people have ever seen a trade like this before? Anybody? Okay. Because I trade, this is a back spread. And nothing too crazy, nothing too special. This is about, though, okay, knowing how to construct the trade. By the way, our members here at TheoTrade were in this one with me. So this is my fill in at 43 cents, out at 4.97. I held mine a little longer than most people. This is Jim M out at 202. This is actually Phil V. I closed the IWM yesterday. By the way, all of these comments, so you know, okay, these comments are today. I don't use anything that, again, every trade that I execute in front of people. Every trade that I execute, everybody can see the trades that I'm executing, and we talk about it in real time. This is actually Judd. I had another IWM back ratio, closed it. By the way, this is the back ratio that we're talking about. 43-cent credit. He closed it for $2.13. This one, Corky, is out at $1.93. Okay, sold the IWM on the 28th for $2.28. And again, full disclosure here. Every single trade is done. Here's another one. This is actually a risk twist spread. So this is getting a little bit more, let's just say, up there in the learning curve. And I think that's okay. But this is the run that produced the gains that you just saw a moment ago in the account. So, people kind of ask, how'd you go up $100,000 in a short amount of time? I did it with really minimal risk. This is actually what we call a risk twist spread. And again, it was put on in February, closed in February. I put it on for a 53-cent debit. What that means is every $53 I invested, I got back $362. It's a 583% return. And again, these trades have all been placed. These trades have actually, been executed in front of other individuals. And that's a big return in this one. But this is actually an XLU risk twist spread. If you're not familiar, I'll just make sure everybody's... The XHB is the home builders. The XLU is utilities. Here's one for every $96 I invested, I got back $1,272. And so everybody's also familiar with this idea. Because, again, there's people that are brand new to trading. And maybe you've never seen this before. Now, you don't have to necessarily do $96. You could do $960 to be able to make $12,720. You just put an extra zero. And yes, what I am showing you right now are option trades. That's not exactly pivotal for this evening, but I wanted to show you a couple of trades to kind of kick it off of what's possible, what's plausible. And again, I wanted to show you trades that were extremely recent. The next one over here, this is another IWM back spread. So another IWM back spread, and this one was even bigger. I like the IWM. The IWM is what we know as the Russell. That's part of the Russell. This one was done for a 20-cent credit and was closed for $6.48. It was a 3-day trade. So there we go. That's I think it's a good way to start off. By the way, this is what our members are saying. GDX ended up having a fantastic trend day, made 50%. But if I had hung on, I could have tripled or quadrupled. Okay. Trader Vic, wow, thank you, TheoTrade. Just closed my positions with a $30,000 profit. And then Greg got out of Lulu Butterfly for 137% return. Listen, we're going through what is going to amount to, maybe you don't see it this way yet, this is going to be an incredibly difficult time. And I'm not just talking about being, quarantined or sequestered to your home, but in all of the chaos, do not forget This volatility is absolutely spectacular. You got to understand, this is it. This is the kind of trade that I sit around for years waiting for this. And this thing, it ain't going away. And I want to show you something, again, very interesting. And I just threw this slide in here a little while ago. Look at the number of trades, okay? Because they're exploding right now. When I say that, like, this is it, people, this is the time to trade, I have to explain what you're seeing on the screen, okay, so that everybody's on the same page. But this comes from TD Ameritrade. Now, I use TD Ameritrade. It's because TD Ameritrade has the largest client order flow in the entire industry. Like, nobody has more retail traders than TD Ameritrade by far, right? And this is what I wanted to highlight right here is, here, this was March, this was February, this is January. Ready? Okay. That's the number of trades that were done. By the way, that's in thousands. 2.89 million trades a day. Look at the numbers though. Okay. September, we're barely trading. Do you realize that commissions right here, commissions went free? They went right here is where commissions went free, and it started to go up a little bit, right? Nothing till the volatility hit in February and went boom, spiked. It's all about the volatility right now, and I wanted to show you that because, again, I think people kind of like, a little bit of they get a little paralyzed in volatility. Apparently, they're not too paralyzed because there's almost 3 million trades a day, right? And TD Ameritrade has actually told me they had a day where they actually did over 4.5 million trades recently. People, we're moving the markets now. And I wanted to start with that. All right, let's get into it. Let's start to talk a little strategy, a little logic. Risk. Your money's on the line. Okay? You got to learn this right up front. Listen, how you handle your risk is directly correlated to your success in the markets. Too much risk, you're going to panic. You're going to close positions continuously, and you're going to close them continuously at the worst possible time. People are so incredibly consistent with their panic. Like, I've looked at literally hundreds of thousands of accounts. I've seen what works and what doesn't, and what doesn't work gets repeated over and over again. Just kind of curious over here, okay? By the way, somebody's already asking about a 401k and IRA. Yes, we can talk about all of them, okay? How many people here have ever been stopped out of a position? Okay, and when you got stopped out, like that was the low tick. That was like the worst price ever. You got stopped out, and then the market ripped literally the exact opposing way. And if you had just held that position just a little bit longer, you could have been somebody, right? And you end up being, throwing up the position over here. Listen, everybody does this, okay? And by the way, admitting it's the first step tonight. So, this is going to be like confessions of a trader, right? Listen, this is actually a gentleman, because I talk a lot about risk, and I wanted to detail this before I dive too much into the risk side of it. This is from Todd Summerall, okay? Hi, Don. Don't know if you remember me. Okay, but I emailed you a few weeks ago, and you told me my delta was plus a couple of thou or more. Basically, what this gentleman is saying is he owned a ton, okay, of stock, and it says you told me to smash it, okay, where I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about portfolio delta. What portfolio delta basically means is his overall risk. Big hearty thanks to you and all your team. My finances would have been a goner without your advice. Okay, you can use this if you want. So thank you, Todd. I will use it. The reason I wanted to throw this in here, I want you guys to know, you can email me and you can say like, Don, is this position okay? I have no problem whatsoever. I'll tell somebody right out, that's the worst crap I've ever seen. Get out of that position or you're going to end up losing a lot of money. Okay, bounce ideas off of it. It is critical that you guys understand that, okay, from this point forward. Listen, here's what works. You got to follow a system that has been sourced from hundreds of thousands of people like you, okay? Cut losses, repeatable strategy to obtain incremental returns. Now, the reason I throw this in here is, a lot of people really don't realize, okay, what it takes in terms of success in this business. And it isn't one big hit. Okay. I love volatility, and I have had an absolutely spectacular, okay, couple of months of trading, but the success is small wins. Okay. It's a repeatable strategy because when the volatility dies down, we still have to be able to make a living. Successful trading. Okay. Strategies are going to exemplify the following principles. So we're actually going to go through a couple of principles before we dive deep into the trade itself. This is what we call principles of building a trade. And I want to introduce everybody to it. Hopefully that's okay with everybody. But when I say I want to introduce you to it, when I say principles of a trade, trade logic, capital allocation, directional bias, what am I talking about? Everything that we do here at TheoTrade, everything we do follows these principles. And you're like, I don't get it. You're about to. So let's go to the first one, trade logic. You got to place strategy, okay, and trade logic first. Now, what that kind of means is like, the vast majority of the people, you get a ton of people that are involved in the markets. They're just infatuated with direction. Okay. You're all about predicting. What do you think? What do you think? What do you think? What's Apple going to do? Turn on CNBC. I don't know. What is Apple going to do? Apple's earnings are coming out. It's going to go up. It's going to go down. Okay. Listen, the right strategy coupled with established entry and exit criteria, you do not need to be right in picking direction in a stock or the markets in order to be profitable. I will talk about that tonight, but more importantly, I will actually display specifically that tonight. So keep that in mind. So that's what trade logic kind of means, right? What strategy? What's your trade logic? Which I'm going to show you here. Next is capital allocation. And I love this one. How and where you allocate capital should strongly be considered as a viable portion of your trading methodology. How many people actually put capital allocation, okay, over being right? Because I know you're going to spend time and you're going to be looking at I got a MACD, I got a Fibonacci. What about my Bollinger Band? That's all fine. But capital allocation is more important. I'll prove it to you. Okay. A bunch of people just told me a moment ago, I got stopped out. Why'd you get stopped out? Okay. Were you wrong? You're like, I was horribly wrong. Or maybe you just had the stop order in there because you were just too big. Yeah. Too much of an allocation. We'll talk about that. Last but not least, directional bias. And I love this one. Listen, I'm not anti-charts. I'm not an anti-chartite. But where I at least recognize this, please. Where you think a stock might go doesn't always mean that the markets are going to agree with those sentiments. You're like, I really think, whoa there, cowboy. Stop thinking, okay? Being right directionally, it can't define you. It cannot define you as investors or traders because you're not going to be right often enough. And I got to stress that to you, okay? You're not going to be right often enough. And when you are wrong, it's just devastating to the ego. Duration over direction. Listen, how and where you allocate capital can define not only losses, but could be the defining factor in overall success or failure in the markets. Our war cry here is duration over direction. You need to be capable of sustaining trades long enough to be profitable, which again, all of this is going to, come to fruition in a few minutes when I start showing you the strategy side of things. But this is where people, they live. Do you want to be right or do you want to be happy, right? And of course, everybody's heard that phrase before, and my wife reminds me of the famous phrase. I don't apply it to my marriage, but it works beautifully in trade. I will always take that stance. You do not have to be right in this business to make money, right? And I'm going to show you just that, okay? Why? Experience, watching order flow for decades, has just taught us invaluable lessons. And as I was saying earlier, have you ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter, right? And you're like, oh, stop order. You get stopped out of a position. And we're going to actually detail this, right? We're going to say I get to this and I'll cut to the chase really quick here. But listen, if you've been stopped out of a position, does it mean you were wrong? Okay. I mean, I'm sure some people are like, oh, I got stopped out. It was the worst experience of my entire life. But were you wrong? Okay. Because you got stopped out and then literally the markets turned around, went the other way. You're like, I could have been right. I should have been somebody. And I want you to think about that because now we're going to get to core strategy and trade logic. So here we go. I want to introduce you to a real world strategy that you can start using tomorrow. Okay. Really, really risk averse. I'm all about risk aversion. And that basically means especially at a time like this, you really want to put a lot of capital on the line. Do you realize what we're involved in right now? I mean, do you realize what we're involved in? I think that's an okay question to ask somebody. The Fed's put $2.5 trillion to work inside of the last 6 weeks. 2.5 trillion. We hit 30 million jobless claims today. I mean, it's a party out there. You got to get your risk under control. Okay. And to get that, first, you better understand risk versus reward. So what I'm about to show you, okay, is going to be eye-opening for a lot of you. Okay. This is probably the first example that was ever taught to me in this business. And remember, I grew up around this business. When you first learn about markets, when you first learn about trading, you're often exposed to this idea of risk versus reward, right? And somebody comes at you and they say, risk one to be able to make two. It's a common strategic entrance to the marketplace. How many of you, and I'm watching the chat right now, okay? How many of you have actually heard that before? The risk versus reward kind of spiel. And you've come in here and you've actually said, yeah, no, I've heard that before, okay? Where you go out there and you literally, right, risk one, okay, to make two. How many people have heard this before? Anybody? Anybody? All right, many times. Have you ever looked at some of the probabilities, though, behind this? Anybody? Have you looked at the probabilities behind it? And that's where people are like, what do you mean probabilities behind it? Right? Have you looked at the probability of success behind that entire logic? Because I think if you're going to trade something, you should probably know what the logic is. We're going to do what we call debunking risk versus reward. Let's take a look at a quick example here. And I'm actually going to write out the example. Let's say that you go out, okay? Right here, right now, I want you to go out. I want you to think about buying a stock. By the way, every example I do, I go stock, okay? Stock. And the stock is going to trade right at about $29. By the way, if you haven't noticed, I like to have a little fun when I do this. I decided it was about 7 years ago. I decided if I'm not having fun doing this, I ain't doing it anymore. So if you're not having fun, okay, this is not for you. You got to have fun in doing this. So you go out and buy a stock at $29, and then I'm going to turn around and I'm going to set a stop order, okay, and I'm going to set my stop directly at 28. I'm trying to make it really easy, right? And I'm going to put a target right on the back of the head of this thing at 31. So this is it. This is the quintessential, or prototypical. What? If I'm wrong here, I'm going to lose $1. But if I'm right, I'm going to make 2. Good. How does this work? How's it work for you? Okay. Now, just assume people go, well, what stock was it on? I didn't ask you what stock was on. I don't really care. Okay. For a strategic entrance to the marketplace, does this work? Because in a normal volatility, okay, does it work? I don't know. I think it's a fair question to actually ask everybody, especially when you're embarking upon, trades with real capital. So here we go. What's more likely to occur? You know what? I'm going to draw the same example again. So you go out here and you have the stock at 29, the stop, okay, at 28, and again, the target at what? 31. What's more likely? So what's more likely? Getting stopped out at 28, okay, which is the -1, or making the $2 profit? You guys tell me. What is more likely to occur? All right? What's more likely to occur? A stock move down $1 or a stock move up 2, okay? By the way, if somebody always comes in here, they go, well, it depended on my Elliott wave, my Fibonacci, my MACD, my... Whoa. Slow down there, okay? I didn't ask you about your Elliott wave, your technicals and so forth. I just asked you what's more likely from a mathematical perspective. Because in the end, okay, math will beat you. And it always does. And the mathematics of this, okay, are really simple. The probability of going down 1, okay, is much higher than going up 2, right? The move down is much more likely, especially in a normal volatility fluctuation. But right now, we're really moving, okay? I mean, markets are crazy right now. So let's take a look at this. Let's actually look at the detail of this. And when I say the detail of it, we're going to look at options. And I said it. I said the O word. Listen, maybe you never looked at an option. Maybe you never even traded the options market. But are you aware? Because people get upset because they don't want to learn anything new. And I think, though, that you have to recognize that you came here tonight to probably learn something new. And I'm going to show you something new. And I'm not here to shove options down your throat. I'm not. Okay. Do I trade options? Absolutely. Okay. I trade everything. I'll trade stocks. I'll trade options. If it's a fair marketplace, have at it. I mean, in the end, who cares? You're just buying stuff and selling stuff. commissions are dirt for free to dirt cheap right now. It's great. But the thing with options, okay, and I'll tell you right now, because I get some people that are always like, I only trade stock. I would only ever trade stock. I'm like, whoa, calm down there. Okay, because listen, options, you're blind without them, because options can help us determining the viability and practicality of a given strategy. So options can actually help you solve, okay, for like, what's the probability of getting stopped out? Okay, like, and you're like, how could that possibly work? Listen, your entire stock strategy, the viability of it can be determined by looking at options. How? Well, we're going to look at that right now. Let us look at what the probabilities are in the aforementioned risk one to be able to make two trading setup. Okay, listen very carefully. I'm about to put up a screen here. The next slide. Okay, it's going to be a little bit scary. You guys okay with that? And I'm going to walk you through it. So nobody, don't freak out on me. Okay, here we go. This is actually this is a screenshot. And if you're unfamiliar with the screenshot, this happens to be none other than Thinkorswim. And again, people go, why do you trade on that one? I helped build a lot of the functionality calculations, and one of the calculations I helped build, we're going to be talking about. It's called probability of touching. It's right here. Okay. What I want to introduce you to is this is a company called Wells Fargo. I don't care if you like it. It doesn't matter. Okay. The reason I picked Wells Fargo is because it's a liquid product. And look at this. It was trading right smack at $29. That's really why I picked it. I needed a nice clean example. And this was the stock trading right at 29 bucks. Okay. I don't have a thing for Wells. Believe me, I don't. Okay. They were great right up until the time they opened up a few extra accounts for me. Now, this is just Wells Fargo. It's trading at 29 bucks. So what I'm looking at here is I'm looking at the option chain, and this is 15 days out. And I'm looking at the probability, okay, of us going to 28 versus the probability of us going to 31. And I've opened up a calculation called probability of touch. What is probability of touch? It's the probability anytime. In this case, I'm going to use the next 15 days, anytime in the next 15 days, okay, of us touching or exceeding a particular point. And you go, so what's the practicality of this strategy? Well, what's the probability of touching 28? Remember what we set up a minute ago. We went out there and we bought the stock at 28, right? And we set a stop at, 28. Well, we bought the stock at 29, set the stop at 28, and then we had this target. And the target was at 31. So all I'm doing is just taking you into the option chain. I'm saying like, okay, so now I want to know the probability of touching 28 right there. There it is 78%. Okay, so you have a 78% chance of what? You tell me. What do you have a 78% chance of? Getting stopped out. It's it. Bottom line. And you go, but is that probability of touching correct? Well, you know what? Okay, if you do, for instance, 50 trades over the next year, that probability of touching is deadly accurate. It's accurate. It's not accurate maybe this one trial, but it's accurate over numbers. And you know what happens to traders? They always continue to trade. And if you continue to trade, you're going to get stopped out 78% of the time if you did this exact same scenario. By the way, the probability of making your $2 is about 42%, 43%. How's that grab you? You're like, sign me up for that. Sign me up for that position. I mean, come on. This is why I wanted to get to this, right? In the Wells Fargo example, the probability of hitting the stop, which is 28, was 78%. The probability of hitting the target price of 31 was 43. The risk one to make two scenario, it's a setup, okay, for a low probability disaster. You're going to flush your account down the drain. Okay. The crazy part of this is you won't flush your account quickly. It'll actually be a slow bleed. And this is something that's constantly and consistently taught to people. And we just show you the mathematics behind it. Okay. By the way, this is nothing new. Why do you think that the most prolific trading application ever designed? There's more people on this trading application, than all other trading applications by the amount of times 5. There are 5 times more clientele on Thinkorswim than any other trading application. Why do you think? Because there's calculations like probability of touching on here. By the way, E-Trade has that now. Okay, Schwab has that now. Everybody has this probability of touching calculation on here. They know about it. Very few people actually talk about it and teach it. Okay, because they don't understand it. This is something you have got to understand. Okay, listen, I took you through that example because now you got to learn to position your portfolio with the right logic. And that's exactly what we're going to do. We're going to position you with the right logic. Let's get down. Let's get dirty. How do you position yourself? Okay, most effectively without exposing yourself to drastic risks and or a low probability, right? So what do we want to do? We want a strategy, okay, that's going to circumnavigate, for instance, the high probability of being stopped out. And again, I want you to think about some of the things that I've talked about thus far, okay, with trade logic. And it gets a little bit wild, a little bit confusing, but listen, these are the attributes that we need. We need to overcome a high probability being stopped out. I want to get away from the stops completely. Number two, I want to define my risk, meaning that, and I'm going to say this as eloquently as possible, okay, if pretty much the market falls apart, things go wild, okay, all hell is breaking loose in the marketplace. I apologize for the language. You have to have defined risk. You want to be able to sleep at night. Number three, provides an extraordinarily high probability of success. Number four, limits capital exposure. Defining risk and limiting capital exposure are actually two different variables here. Limiting capital exposure, how about you do a strategy for $100 where you will absolutely not have more than $100 at risk, okay, and never need to buy or sell the stock, okay? This is important. And that's exactly why I'm going to talk in detail about an option strategy right now. Okay. So again, yes, I said the O word. Enter the in-out spread. In-out spreads, they're designed to limit exposure and to maximize potential with minimal movement in the underlying. Yes, in-out spreads are option trades. Okay. And again, don't fear the options. You know, sit back, relax, and hey, who here is brand new tonight, never traded an option their entire life? Okay. Anybody? Because I'm going to take you through a couple of basics, so don't fear, okay? The option spreads are going to allow us to limit our risks without the use of stop orders while providing really big upside potential. I showed you a couple of trades earlier, all right? I like this. Never traded. That is fine. Okay, what I want you to do is we're going to talk a little bit about an in-out spread right now. And as I talk about this in-out spread, all I want you to do at this point is grasp big chunks of logic. Don't get caught in the finite details. That's for people that are brand new. Brand new, big chunks of logic. When I say big chunks of logic, I mean, what is an in-out spread? How are these options working to define my risk? Like, understand that. For those of you, though, that are a little experienced and have traded some options, and listen, we have a lot of people on tonight. If you've traded some options, you actually want to you're really going to dig in and kind of catch every little nuance, right? And I want you to understand in detail some of the trade logic. And I hope that makes sense. I think it's going to make a lot more sense here in a moment. So whether you're experienced, whether you're brand new, you're both going to acquire quite a bit right now. So we're going to go out there and we're going to look at a particular stock. In this case, I'm just going to start right now with a, we'll call this like a fictitious trade to begin with, just to get the scenario through. And then we're actually going to go into some live positions, right? So let's get down to it. Okay. By the way, anybody trading today? Anybody trading? Because we're going to go through a couple of underlying specifically that we've traded literally today. So here's a stock, and you know what? I'm going to put this stock, okay, and I'm going to put it at a value right at 200, right? So we're going to have a stock at 200. Now, I am not going to own the stock. You're like, you're not? No, I don't want the stock. I don't want to buy the stock. Why don't I want to buy the stock? Because could you have a $200 stock that you wake up the next day and it's trading at like 150? I don't know. Call it Tesla. Tesla's almost $1,000 stock, but I mean, it can happen. So what we're going to do is we're going to start with limiting our risks. And here's how part of it I'm going to limit my risk. I'm going to go out, okay, and I'm going to buy a 199 call. I'm going to buy a 199 call. And that 199 call is going to cost me a premium. In this case, I'm going to make the premium $3. And we're going to say that this 199 call is good, okay, for 1 month. Now, in buying a 199 call, because I know some of you are brand new, okay, we're going to put this down here. We're going to put buy the 199 call, okay, pay $3 for it. Okay, the C stands for the call. So you're going to buy the 199 call. What is a 199 call? Well, a 199 call, this could be in a product like the Spiders, the SPY. This could be in a product like the QQQ. A 199 call gives us the right, not an obligation, the right to buy the stock at 199. Okay. Bottom line, an option is just a right to buy the stock at 199. Now, do I want to buy the stock at 199? No, I don't want to buy the stock at 199. So you're like, so then why do you buy the 199 call? Because I want the right to buy the stock at 199. Because I have the right to buy the stock at 199. What if this $200 stock goes to 210? So if you have the right to buy the stock at 199 and the stock jumps up here to 210, you could buy the stock at 199. Everybody else has to do what? Buy it at 210. What's a 199 call worth? You tell me, what's a 199 call worth when the stock's trading at 210? Okay? If you have the right to buy it at 199, everybody else in the world has to pay 210 for it. That call is going to be worth at least $11. And you go, prove it. Well, if you have the right to buy the stock at 199, can you buy the stock at 199? Yes, you can. So you buy the stock at 199, but then the stock is trading at 210. So you buy it at 199, you sell it at 210, you make your $11. But we have no intention of doing that. We're just buying a 199 call. Okay, for what reason? We're going to buy it and then later sell it. That's the first portion of the trade. The second portion of the trade, okay, so I buy this 199 call right here. And I am also going to go out and simultaneously sell, okay, in this case, a 201 call. And the 201 call is going to be trading for, we're going to put it at $2. Okay, I'm going to put that down below. So we're going to turn around and we're going to sell a 201 call, and we're actually going to collect $2. Put this down below. What the whole trade is going to cost me is $1. Just bear with me for a second, because a lot of people are like, whoa, 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 whoa. How you sell something? You never owned it. See, options are all about rights, and they're all about obligations. I have the right to buy the stock at 199, but I could turn around and actually open a trade by selling a 201 call. You're like, excuse me, sir, I think you're out of your mind. How do you sell something you never owned? I'm selling myself into an obligation. Okay? It's like marriage. I've sold myself into the 201 call. If you sell yourself into the 201 call, okay, selling a 201 call obligates me to give somebody my stock at 201. Now, do I own stock? No. But what do I own? I have the right to buy the stock at 199. But you know what this does? This says somebody has the right to buy my stock from me at 201. So if you have the right to buy the stock at 199 and somebody could take the stock from you at 201, what's the most you could possibly make in this strategy? You can't make more than from 199 to 201. You can't make more than how much? $2. $2, $2, $2, $2. What did I pay for the strategy up front? $1. So calm down for just a second. Okay? I bought the 199 call, gives them the right to buy the stock at 199. I sold the 201 call, gives somebody the right to take stock from me at 201. Let's look at this good, bad, or indifferent. If the stock comes all the way down to here, where's here? Let's say the stock goes to 190. Or if the stock goes here, where's here? Okay? Let's call it 210. What'll happen to me? If the stock goes all the way down to 190, I'll lose $1. But what happens if the stock goes up to 210? Well, if the stock goes to 210, I have the right to buy the stock at 199. Somebody takes it from me at 201. But for the most part, all I can make is $2, of which I paid $1 up front. So what is this strategy? And you're gonna hate when I explain this, but I love doing this. Okay, this strategy is literally risk one. Okay, to make one. I'm actually risking $1, but the most I can possibly make is $1. And somebody goes, time out, time out. Why would I ever want to do that strategy? Why would I want to risk $1 to make $1? Huh? Why would I want to do that? Because if I'm wrong, I'm going to lose $1. And then if I'm right, I'm going to make $1. Then I would have to be right and right and right and right again. Wrong. You don't have to be right consistently in this strategy. Does anybody see it? Okay. What does this strategy provide to you? What does this strategy provide to you? When I say, does anybody see it? Okay. Do you see the edge in the strategy? I know the screen's a mess and I got crap all over the screen, but do you see the edge in the strategy? Okay. I think it's a fair question. Do you see the edge? Does anybody see it? Okay. A couple people got it. The downside risk is defined. The downside risk is defined. You're close. You were really, really close, but I think you guys are on the right track. Okay. Not only is the downside risk defined, okay, this trade could be good for a month, but it could also be good, okay, for 2 months. You know what? You could actually do the strategy for 2 months. Ironically, it won't cost you any more to do it for 2 months or even 3 months. If you did the strategy, it would not cost you more for 3 months. Most of the times options cost more time, but here we're buying one option and opposing it by selling another option, so it would offset all the time value in the strategy. Why is risk one to make one okay? Now I'm going to show you. Okay, so you put this strategy on tomorrow and the stock is at 200 and it sells off and it sells off. It had earnings and you go, oh, the humanity. The stock goes all the way down to 190. But guess what? That happened tomorrow. You're like, literally, you're like, I lost my dollar. You didn't lose your dollar yet. Okay? You're lying dead at the bottom of the pool, but it ain't over, baby. Because I'll tell you what, you got a whole another month to go. So over the course of the month, the marketplace rallies back up. It gets above 201. We don't need it at 210. We could have this thing at 203. We could have this thing at 201. It got above 201. What do you make? $1. It's about probability. Okay? Yes. Okay? You are risking one. Okay? To make one. But you have a much higher probability of making the dollar before losing the dollar. This is a probability-based trade, and that's what people don't get. That's what trading is about. It's about having the right trade logic. Now I'm going to start to show you, though, with real examples, okay? Because what you're looking at right now, yeah, you're like, this is a little bit fictitious. Well, let's get to the real. Does that make sense to everybody, right? Let's continue. And let's continue the in-out spread with our Wells Fargo example, all right? But in this example, we're not going to go out there and buy stock. I'm not going to use stop orders. I'm going to use an in-out spread. Okay? I'm not going out and buying a $29 stock. We're going to use the spread to limit the risks and provide a high probability, okay, without the use of stops. Remember this from like Wells Fargo? I actually found a clipping of that. Wells Fargo! Okay? What this really is the bank robber. And except they work at the bank. You have to look at the irony of that with Wells Fargo. I'm sorry. Somebody here probably works at Wells Fargo. I'm going to get a nice email later. Good. Stop opening accounts for us that we didn't open ourselves, right? It is actually a bank robber. I've decided that it's no longer safekeeping, just the bank robber. That's actually why I picked Wells. That was trading right at 29 bucks. Okay. Here's the symbol is WFC. They are bank robbers. Okay, WFC. So let's actually do a real example. When I say real example, this doesn't look real, but it's real. Exact same thing. Listen, this is Wells Fargo. And Wells Fargo is trading right at $29. So you go out and buy a 28 call. You buy a 28 call because 28 call gives the right to buy the stock at 28. Simultaneously, I sell a 30 call. Okay. Now, I bought the 28 call for $2.15. I sold the 30 call for $1.15. I take that down below. I'm in the spread for $1 debit. So what am I doing? Okay. I'm going out there and risking one. Okay. To make one. But let's say we put the trade on literally right now. What's going to happen over the next couple of days, couple of weeks to trade? Let's say that we put this trade on for, I don't know. We'll just put it up here at 30 days. Okay. But you could have done 2 months. That's fine, but let's just do 30 days. Let's say 30 days. What happens to us over the next 30 days? Well, you put the Wells Fargo trade on and immediately it goes against you. How do you get a stock to go down? Buy it. Okay. So you put the trade on and the thing immediately goes against you. And now the stock is no longer trading at 29. Now the stock is trading, let's say, at 26. And you're like, oh, this hurts. This hurts. And before you know it, the stock rallies back up to 29. You're like, I'm okay. I'm going to be okay. And then it gets somewhere up here, maybe 31 or even 32. And you're out. You're out of the contest. The risk one is viable. There are times where you will lose your full dollar, but the probability of you making the dollar is considerably higher. Why? Because you can hold the trade in the face of adversity. There was a method to the madness. Earlier, I actually told you something and I said, duration over direction. You know what duration is? It's putting on a strategy that you can actually sustain over time. Okay? It's putting on a strategy that you can actually sustain over time. Duration is over direction. What that means is capable of sustaining it because you are wrong to turn around and be right and not use a stop order, because a stop order, okay, is finality. You're like, oh yeah, I got stopped out at 26. It's over, baby. You lose the dollar. Not in this strategy. You don't lose the dollar in this strategy. Okay? Because again, you may lose the dollar. Maybe you're going to be completely wrong, but I'll tell you, in a large number of occurrences, okay, they'll actually turn back around. That's especially what you can do right now. And you're like, why is volatility a good thing? Because in volatility, you're all over the board. You're all over the board. You're fine. By the way, this trade that I'm showing you right now, this can be done in an IRA. It can be done in a self-directed 401k. This trade can be done in pretty much any kind of account that you could dream of. And, all right, and by the way, yes, you could trade options in the IRA. And this doesn't have to be done as a bullish trade. I'm showing you a bullish example here. I think the stock is going to go up. You don't have to think the stock is going to go up. Maybe it's going to go down. Okay, listen. This is why you want to use in-out spreads. And I detailed this a little bit earlier. I was like we need a strategy that what? Overcomes the high probability of being stopped out. Well, there are no stops in here, so check. Defines your risk. We knew what our risk was in there. How much risk did we have? $1. You never need to buy or sell the stock, which I didn't do, and provides a high probability of success. You can initially be what? Wrong. Okay, you can be wrong. And in this thing, you can actually come out right. And it's important. Now, okay, if you saw the previous example, okay, you're like, it's still kind of fictitious, really? Well, let's show it to you, okay? Because I'm telling you right now, you need this in your life. Now I show you when I say the real example. Well, okay, it doesn't get more real than this. This is a screenshot, okay, taken today. You can look at Wells Fargo right now on the screen. Okay, as I said, I want you to always be able to walk away with something tangible, something that could be used, right? If the trade logic doesn't work for you, look at the example. So into the example we go. Here we go. This is Wells Fargo. There's a method of why I picked Wells Fargo because it was trading right at $29. So as Wells Fargo is trading at $29, I actually went 36 days out. In this example, I went 36 days out. I turn around and I buy the 28 calls. I sell the 30 calls. I just showed you this. Look at the pricing on here too. Okay. I used the worst pricing available. Okay. I talked about what? $2.15 and then I sold the other option for what? Okay. For $1.15. Look at the prices. All of it is right there. Okay. The strategy comes out to about $1 debit. Now, a $1 debit. I could do what's called one contract of this. I could have $100 at risk. I don't care right now whether you're trading with a $2,000 account or $2 million account. You want to learn this? Your max risk is what? Is $100. It doesn't have to be $100. Instead of doing one contract, you could do 10 contracts. Then you have $1,000 of risk. You could do 100 contracts. You could have $10,000 of risk. And there's always one in the crowd like, what about commissions? Your commissions are 65 cents a contract. 65 cents. Okay. You have $100 at risk and it's going to cost you what? $1.30 in commissions. Okay. What a beautiful world we're living in right now. Again, this is the kind of stuff you have got to learn. In this marketplace, I want to say this as nice as I can. You cannot survive without defining your risk. You're going to go out there, you're going to buy a stock, and I'll tell you what's going to happen to people because I've watched it so many times before. Remember, I watched from behind a screen. Okay, I watched the entire internet bubble come down in 2001, 2002. Okay, I watched 2008. Front row tickets, baby. October of 2008. I got called in the middle of the night. They're like, you need to get on a jet and you need to get to Chicago because we have some very, very severe issues going on here. And it was October of 2008. I mean, it was crazy. I've watched it before. What we're going into right now is going to be far worse. Okay. 08, forget about the banks for a second. Right now, what we're going to see, and 08, what you think was kind of isolated to the banks, it started with the banks. Okay. But what we're going to see right now, it's going to be everywhere. There's going to be bankruptcies left and right. You better define your risk. Listen, this is a $29 stock. Can you do this stuff, though, on some big boy products? Let's do it. Okay. In-out spreads are going to give you the power to trade massive stocks. Okay. Massive index products. Mere pennies at risk. Now I'm actually going to show you what I say, tangible strategy. This is an underlying that most people are familiar with. It's called Amazon. All right. Here's a strategy that I want to detail. And why do I want to detail it? Amazon had earnings tonight. Okay. You're going to trade earnings? You're crazy enough to trade? This is a $2,000. Okay. And here it is. $2,418 stock and 9 cents. It's a $2,400 stock. This happens to be a bearish strategy that I'm actually setting up right now. Again, this is a bearish strategy that I'm setting up. And I'm actually going to just detail it for you really quick. Okay. What I did is actually purchased, okay, the 2420 puts, okay, and I sold the 2415 puts against it. I did this with 1 day. I just wanted to make a point. If you're going to go to earnings, Go big or go home. Listen, it's a $5 wide spread. It cost me precisely $2.50. What's the outcome of it? Where's Amazon right now? Amazon, it's down huge in the after hours. Okay, this one, it's gold, Jerry, gold. It's going to work. And the point I wanted to make with this, it's not about being right or wrong. This is a strategy that I put on to display, okay, the fact that we're trading a $2,418 product, okay, with $250 at risk. That's it. It's $250 at risk. And it could have been more than that. I could have done 10 contracts, could have had $2,500 at risk, but it's critical. And this one happens to be bearish. I think Amazon, it's overdue. Okay. It's due. It's done. The strategy, this one's done. The next one I'm going to show you, you might be familiar with this stock as well. It's called Apple. Okay. Apple was trading at $291. That's when I executed. It's $291 stock when I executed. This too is a bearish strategy. Right? I was bearish. Okay. I put it on. This one actually cost me $2.40. That is my max risk. It's $240. Took a shot to the downside. Okay. This one's going to work out as well. Apple in the after hours is trading down in this neighborhood here. When I say down in the neighborhood, Apple has actually dropped. I was trading 285, 286. We'll see how it trades in the morning. Okay. But that's it. This is the way that you want to be able to trade. Okay. Right, wrong. It's $240 at risk. You can be wrong. You can survive. You can be wrong and still pull it out. And that's what's critical. Now I'm actually going to show you a number of trades that I've done. Okay. These are trades. And by the way, I love to show this because these are trades that I put on with no knowledge if they're going to work or not. And we're actually doing all right here in the after hours. We got Amazon. We got an Apple strategy. These are trades that I've put on previously. So I'm actually going to take you through a couple of live in-out trade examples. The first one that I'm going to detail, I'm going to go through quite a number of trades here real quick, and I hope you guys appreciate, because not too many people, I think, show live trades. And okay, this is a QQQ in-out spread. What's the QQQ? It's the NASDAQ. I put it on, okay, February 6th, closed it February 24th. I know, that's 2 months ago. It's almost 3 months ago, Don. Show me something more recent. Oh, we will. Okay, we're going to go through a bunch of trades over here. I just want to get you to that same logic. So this trade, okay, it's every $80 I invested, I got back 139. It's 74% return. Again, this wasn't done for an 80-cent debit. I closed it for what? $1.39 credit. It's a 74% return. So I'm going to show you a little bit of, if you will, my account history over the last couple of months here. So this is just going to be in-out spreads. That was a QQQ spread. The next one up is JP Morgan. Okay, what did I do inside of JP Morgan? Oh, in JP Morgan, this was actually put on February 6th, taken off February 25th. For every $81 I invested, I got back what? Okay, $159. It's a 96% return. Now, before I go any further, I want to reiterate one key point in here. You don't have to come out and do this with $81. You could do 810. You could do 8,100. Personally, I think 8,100 is big for a spread, especially when you're starting out, but you can do it. And it's $81. If you have a $2,000 account, okay, nothing's prohibiting you from trading an $81 strategy to return 159. This is about consistency. And that's important, that you realize that you can start to build an account with in-out spreads. Next one on the docket, Amazon. Okay, I trade Amazon a lot. Now, I started getting a little bit more recent here. So this one was actually done and executed in 1 day. So I actually opened the position, and I did not know Amazon was going to sell off. Okay, I opened the position and closed the position in the same day. I executed at 7 o'clock in the morning, closed right before the close. Closing market here on the Pacific time is 1 p.m. I opened for a $225 debit. I closed for a $307 credit. Every $225 I invested, I got back $307. It's a 36% return, but it's a 36% return inside of what? 6 hours of trade. Next one on there, Costco. I trade Costco a lot. I talk about Costco a lot. Costco, this is actually a bearish strategy. And people think, how could you be bearish in Costco, man? That's done nothing but what? It went down. It didn't have to go down for a long time. Okay, this is actually executed on March 17th, closed March 24th. Every $211 I invested, I got back $335. It's a 59% return. Okay, 59% return. I never had more than 211 at risk. I'm just going to tell you right now, I do more contracts than one contract. Okay, but in that particular circumstance, if you wanted to do one, you'll have nothing but $211 at risk. Okay, it's about consistency. And I stress that every single time because, you know, you go out there and you put on a strategy and you're wrong, you're totally panicked. You're like, okay, you could lose $211 in here, but you have a really high probability, okay, of making that return. Another one in Costco. This is a separate Costco trade. Another one in Costco. I put this one on March 11th, closed it on March 24th. This is every $110 I invested, I got back $177. This one's a 61% return. So I figured I'd show you two various strategies. Moving on, Microsoft. Okay, this is a Microsoft in-out spread. This is actually executed on March 19th, closed on March 20th. Kind of ironic. A lot of the strategies are closed in a similar day. It's because we got a really nice market move. This one was every $211 I invested, I got back 301. It's 43% return. And this one, by the way, every single strategy that I'm showing you, okay, every single strategy I'm showing you was done live. We text out trades to people. Okay, you can kind of follow along. And just to display this, here's Rodney got out of Microsoft, 175% profit. I like this one. Jeffrey Frost, day one for me. Buy Microsoft put for 88 cents, sold it for $1.93. That was easy. I like that one. This is Microsoft. Got in at 75 cents, out at 265. Alex Stevenson, Microsoft, bought at 93 cents. What I want you to see in here, okay, people are at different prices. Okay, because we're trading live. I don't want you guys to think for a second that, you know, everybody's going to get it at exactly the same price. This is real. These are trades. Okay. Kim Heap, hi Don. Should Microsoft this morning 200% profits, and on and on and on. Okay. Again, these are trades that, and I wanted to show you some of the dates of this. We're getting a little bit more recent here. Let's even get more recent. Okay, let's actually move on to Boeing. So this is Boeing. This is actually a trade that I put on March 25th, closed it on April 2nd. So now we're obviously in this month. This is a Boeing in-out spread. Every $238 I invested, I got back $362. This is a 52% return. Again, it's about consistencies. You've seen a lot of like 50, 60% returns. That becomes much more clear later. This strategy as well. This is Alex said close Boeing for a 357. Okay, that's a 50% profit. I got 362. He got 357. This is actually a Mary Ellen, closed it for a 363 credit, just filled for a 30% profit in Boeing. This is out for 364, 55% return on Boeing. Boeing sold it for 357. Wow. Thank you, TheoTrade. Just closed out my position for $30,000 in profit. Okay. Next one. This is Visa. And again, I could go all day long with all the different trades that we have on. This one's open March 30th, closed April 1st. Every $107 I invested, I got back 152. It's a 42% return on Visa inside literally, you know what? Okay. Really short amount of time in here. Here's Intel. And again, we're getting more recent. This is only one day as well. This was put on April 7th, taken off April 8th. Every $86 I invested, I got back 111. This is a 29% return. Again, literally the turnaround time is almost precisely, if you take a look at the times and execution of the trade, it's almost precisely a 24-hour trade for a 29% return. Getting even more recent in here, this is the XLE. Okay, now we're actually almost up to speed and up to date over here. This one is April 14th, closed on April 15th. Every $87 I invested, I got back 120. This is a 38% return. Okay. And this is, took everybody along the ride with this. This is XLE was my first ever option trade. This one I love. That's why I put it in here. This XLE was my first ever option trade in, out, and filled. I'm officially 100% win rate. I love that one. Okay. Marshall said, TheoTrade and team. Russell, nice. Okay. I closed for $1.14. First one lot. Indy Jeff, I closed the XLE spread for a 30% gain. In at 87 cents, out at $1.15. Okay, as I said, I'm getting even more recent here. Here's the QQQ. This is as recent as, of course, last week. And I've got a ton of these spreads on, but I'm trying to give you the most recent up-to-date trades that I've got. And this is every $80 I invested, I got back 108. This is a 35% return inside of the QQQ. And we're pretty much up to speed over here. Mariano, out my second QQQ for 30% profit. Paul said, I made good money in the QQQ trade. Thanks, Don. Greg Pass, okay, 30% on QQQ. By the way, if you look at the dates, I actually copied these out of our chat room. They're all April 21st. Obviously, the date of the trade, when the execution of the trade was on April 21st. Tried really hard to get $1.06, but the market forced me to get $1.08. Okay, Mark S here closed for $1.09. Listen, this is the time to do this stuff. I just can't stress, and I wanted to show, I could show trade after trade after trade. all I wanted to do was highlight that's just in-out spreads that I displayed to you tonight. And I say, what better time, okay? You're going to learn a skill set that can last a lifetime. And when are you ever going to have time like this? Most of you are still going to be locked down for at minimum the next 2 weeks. But let's be realistic here, okay? Even when they end the lockdown, we ain't leaving much this summer. I know some of you are probably going to have to go back to work, but we're not leaving much this summer, okay? And you're never going to have time like this again. If you're still working, do it. It's part-time. If you're quarantined, you're going to emerge stronger in a better financial shape. I mean, it's going to beat watching Netflix on a day-to-day basis. You got to learn this stuff. I'm telling you what our members are saying. Jamie G, 55% plus, start working out from home. Okay. JHS, good morning, all. Another day of working from home. Thank goodness for TheoTrade to keep me sane. Listen, if you don't have a lot of time, okay, all the trades that I showed today were displayed live at TheoTrade. We text trades out to people. We put them in the chat room. The trade results, okay, are perfect for part-timers. You can even use on these in-out spreads, okay, good till canceled orders. If you're unfamiliar with that, you can get you familiar with it. When I say a good till canceled order, if you're unfamiliar with what a good till canceled order is, okay, you can set these trades up to be GTC, which again is good till canceled. It effectively means, okay, you get in with us and it'll execute out for you. A fraction of your time is good enough. You don't need to be glued to the screen. And I just wanted to detail that because people get infatuated with this. This is going to take a lot of time. I'm not sitting here trading all day, every day. Okay. These trades are very much set and forget. Now, the characteristics of an in-out spread. I think the attributes of the high probability in-out spread are undeniable. You never have to buy or sell the stock, right? You define your risk. The risk is limited to precisely your comfort level. You need not use a stop order. You can vary the time frames and not pay more. Like, look, I could do the June 5th trade, but I could do a trade out all the way to August. Okay. And again, that's variable. It's up to you. The probability of profit is extraordinarily high because you could initially be wrong and still come out right. It's a perfect spread to reduce risk of a stock portfolio. It's also an excellent tool for those seeking returns to build a smaller account. Again, $2,000 account or $2 million account. I don't care. Okay. What's important is that you understand the structure of the spread, that you understand that you're going to need this for the foreseeable future. Now, building the spread. This is where everybody's like, I don't understand options. Listen, in the last hour, we explained a little bit about options to you. Give me a few hours, okay? Do not let these options intimidate you. You give me a few hours, you're going to completely understand this stuff. Listen, the spread below is being done for a dollar debit. But the spread is also a massive power saw. And this is an analogy in options that I've used for years. You know, if you're going to go out, you're going to build a house, okay? You're going to use a power saw. Why? It's quicker. It's faster, okay? But if you have no idea what you're doing with the power saw, you're going to lop off a couple of fingers, possibly an arm. Options are going to be the exact same thing. I mean, options are like the power saw in this marketplace. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the markets. But if you don't know how to use the options correctly, if you don't know how to set up the spread correctly, because everybody has that fear, you're going to cut off a couple of fingers, okay? And it's important. That's what we can show you here, okay? You can do in-out spreads. Maybe you don't have options experience, or you have limited experience, okay? Don't let the option side of it intimidate you. You're going to need, and I can't stress this enough, you need these strategies for the foreseeable market future. It's not about being bullish or bearish. You're going to have companies go out of business. You're going to have stocks gapping. Okay. We've had volatility, okay, and sustained volatility. Now what? Since the end of February, you've already been through March. You've been through April. What are we moving into, huh? 60, 70 days of extreme volatility. You're going to have to define your risk. We can show you, okay, how, and we can show you precisely when to place in-out spreads in a matter of a few hours. What we do here at TheoTrade is we create detailed recipes for every trading strategy, including, of course, in-out spreads. When I talk about recipes, I got to stress to you, what is a recipe? Step one, okay, what stocks do this on? Step two, I mean, listen, it's just like baking a cake. You don't bake a cake without a recipe. Why trade without one? You know, if you get into a plane and you hop into the cockpit of the plane, do you just, turn the key, the little rabbit's foot on there, turn the key, boom, we're taking off? Oh, the pilot literally looks around the cockpit, pretty much touches everything, goes through a checklist, makes sure. The pilot literally walks around the outside of the aircraft, pulling on the engines and so forth. Do you do that when you trade? I think it's a fair question. Do you do that when you trade? Do you actually have a checklist, something definitive? Okay? Because that's what you need in a marketplace that's volatile. Okay? You got to be consistent. This is what you're going to need to know to successfully enter and exit in-out spreads. First of all, you need to know what makes a viable in-out spread candidate. What's a good candidate? When I say a candidate, what do? You saw IWM, you saw QQQ. You saw me trade Apple, you saw me trade Amazon. Okay? But what really makes a viable candidate? I'll tell you what. Volatility. What volatility do I seek out? Too much volatility? People are like, I want to do this on Tesla. Not the right strategy. You're going to get your head taken off. What volatility should I seek out? You got to know the right volatility. What expiration do I select? Have you looked at an option chain lately? There's options for a day, for a week, for a month, for 2 months, for 6 months. There's so many options, and the options is ridiculous. You got to pick precisely the right expiration. You got to be zeroing in on the right expiration. What should be the delta of the option I buy? A lot of people are like, I don't even know what delta is. Okay? We'll tell you the delta of the option you buy. Then we actually tell you what options do I sell. Remember, in the spread, remember I was buying the 199 call and selling the 201 call? And then over in Wells Fargo, I was actually buying what? Okay? Stock was trading at 29. I was buying the 28 calls, and I was turning around and selling the 30 calls against it. You got to know what to buy, what to sell. Okay? You got to know, how do I build the trade? Now, some people may, okay, I think I can figure that one out. Really? Because that also includes, what is the right amount of risk for me? If you have a $2,000 account, if you have a $2 million account, okay, how much do I actually allocate? Let me show you what we do here at TheoTrade. We build recipes in trading. Okay, you're going to find this out one way or another. And again, I always harp on recipes, because what you find about trading, okay, it's not just hopping in a car and turning the key and be like, go and hit the gas. Okay, if you don't have a full game plan, every variable has to be covered. Every variable. What if the stock goes up? What if the stock goes down? Because trading, it's about answering the what ifs. What might be a good stock or ETF candidate for my in-out spread? What's the correct options expiration cycle to buy my in-out spread? How much capital do I commit to these spreads? What strike price options do I buy and sell, and how many? In growing a small account, what should my allocation be? TheoTrade has the answers. These recipes, okay, are checklists. And those checklists, what they do is they go through unique variables. When I say unique variables, what happens if earnings is coming up, if there's a dividend payable, if the stock goes up, if the stock goes down? We're just talking about right now, what do I buy, what do I sell? But then you're going to be in the strategy. And once you're in the marketplace, stuff happens. We actually build really definitive flow charts and say if we go up, if we go down, if dividends are coming, every single variable that you're going to encounter is covered in these checklists. We have the answer to your questions. We'll give you the right probability for you to trade. We'll give you how many option contracts do I trade for my account size? When do I close my in-out spread? What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Cannot fix a losing trade. It comes down to the how, the when, the why, at what price. And it's just the beginning. It literally is just the beginning. We're scraping the surface of the variables that you're going to face while buying an in-out spread. Okay? Listen, you can read what a spread is. Anybody can read what a spread is. You can go on and Google right now, what is a spread? And of course, it's going to pull up, 10,000 different Google pages. Okay? Maybe some of you even know how to build a spread right now, right? Might know that. But you need TheoTrade's recipe. You need that recipe for success. Myself, 20-year plus trading experience. Access to client order flow for over 15 years. I viewed and studied millions of trading accounts. I ran education for 15 years at a firm that had the largest options order flow in the entire industry. Okay, it was Thinkorswim and TD Ameritrade. All of the criteria that we have comes from live trading, and it comes, okay, from the knowledge of having studied these accounts. This is what trading is. It's about following methodology. It's about following criteria. It's about following a recipe. Criteria is the recipe for success. The following strategy and the corresponding criteria requires just the utmost attention to detail. We literally spent years, Okay, and I say we, a lot of people involved, okay, spending years to fine-tune the in-out spread, trade setup, and the criteria. When you approach the section on criteria, you got to follow the steps to build a trade. Okay, this is the guide to small account growth with in-out spreads. Okay, I am the trade instructor. This is a 4-hour course. It's available immediately. When I say it's available immediately, okay, you can enroll for this class tonight and start viewing it tonight. It's 24/7 access. The class has a slide deck with it that includes all of the entry and exit criteria. It's the checklist. It's available immediately for download. The course is archived, okay, as I said, 24/7, but we also have capacity for mobile, iOS, and Android, meaning that we have our own TheoTrade application for both Apple, okay, and Android. The course is $497. And again, it is a full-blown 4-hour course. There's tremendous, just a tremendous amount with it. And I'm actually going to take you through in seconds here some of the curriculum for this particular course. I'm going to answer a couple of questions tonight, okay? We have a few bonuses for you. And I'm telling you right now, if you're looking at the, yeah, okay, it's another class over here, you stick with me right now because you're not going to want to miss some of the bonuses that we have with this particular class. The class, okay, can stand on its own. The class is worth $497. Okay, people to pay $4,000 to $5,000 for a class like this. Okay, it is phenomenal. I'm telling you, the detail in this course is just massive. It's one of the reasons that we pre-recorded the class, and put it in the archives. It's 4 hours. It's intense. It has, again, a phenomenal checklist. Then when you're done with the class, you just have to go through the checklist. We even put a Cliff Notes checklist together. Again, it's $497. Stay with me for a moment because, again, I'm going to show you a couple of bonuses for tonight that are going to be spectacular. Listen, small account, in-out spreads. These are a couple of key points. This is the curriculum for the course, okay? Learn to construct in-out spreads. So this is exactly what we're going to do in this 4-hour course. You're going to learn to build in-out spreads, okay? Easy to learn, easy to place. How to buy long-duration options without paying more. So you're going to give yourself the gift of time. Number 3, how to use defined risk-reward strategies so you never have to lose sleep over your positions again. I think that that's pretty critical at a time like this, right? I mean, listen, you're going to define your risk. You're going to be able to sleep at night. It's going to reduce the risk of your portfolio. Number 4, in-out spreads are used in any market condition, but, are going to be really essential in terms of volatility, okay? And then we're actually, of course, going to teach you to build your own in-out spread with detailed step-by-step entry and exit criteria. Number 6, in-out spreads, easily managed with set and forget order types. We have an entire section in the course about GTC, good till canceled order types. Number 7, in-out spreads can be done with a trading account of $2,000. These trades can be done in retirement accounts. In fact, every single trade that you saw today, every single one of them today was done in a retirement account with minimal options experience. If you do not have options approval, we will get you options approval. Okay, we'll take care of you. Number 9, capital allocation, position sizing. It's a big portion of the course. It's actually a technique. It's capital allocation technique to be able to grow, your account. Obviously, number 10, you're also going to learn to follow the recipe to be able to, in fact, build the trade. Now, we know, that many of you, and I think that this is also a fair question tonight, we know that many of you have been to courses before, and you pay $497 for a course. And then, of course, after you take that course, somebody says, well, you got to buy an indicator with the course. And then after you buy the indicator with the course, you have to take a class to learn about the indicator, to be able to actually trade the indicator against the course. And then you have to be part of a live trading room to learn anything about it. Listen, at TheoTrade, I just want to tell you guys a little background about this. I ran the education division and built the education division of Thinkorswim and then ran it at TD Ameritrade. I have seen everything in terms of education. I've seen every educator. All of them would come and say, like, hey, take our clients. Listen, a lot of it is just a joke. You got to understand what we're doing here at TheoTrade, vastly different. We're going to go beyond one class or one indicator. Like, we understand this thing where you want everything to trade. You want everything to invest. You want it at one place and you want it at one price. And that's what we do here at TheoTrade. This is not going to be piecemeal. We don't sell a class for $497 and sell another class for $497. We don't do it. And that's exactly what I'm going to show you here in terms of the bonuses tonight. The first bonus tonight, we're going to give you access okay, to 88 trading classes. It's our entire library of trading classes. And I'm going to tell you exactly, people, why do you guys do that? First of all, okay, because we can. Secondly, because it's not right to just give you like one class. It's not right to give you just one class and be like, okay, you learned the in-out spread, you go now. Okay, there's no support whatsoever. It's just a ridiculous, like, the expectations. What are you going to do? Listen to a 4-hour class? You're like, oh yeah, I'm just ready to go. Okay, we're going to give you classes, 88 of them, and we're all available immediately on demand. Okay, you can also watch them on the TheoTrade mobile application. This is a couple of the classes, and this is just one of the bonuses. We're going to give you the class, of course, the in-out spread. It's the guide to small account growth with in-out spreads. It's archived. It's ready to go. We're also going to give you the guide to surviving and thriving in extreme volatility. That class was only done 3 weeks ago. We're actually going to give you growing a small account with black book spreads. That one was also a recent class. How to collect income being short. The next big short, this is the risk twist spread, which you saw early on tonight. The guide to selling high probability spreads. Iron up, iron condors for income, selling premium and minimizing your risk. Day trading NASDAQ futures. You want to day trade? We have classes on that. Here's actually covered calls. Income generation for your stocks. Essential skills for consistency in trading class. That's a critical one. Okay. The top 10 skills for growing a small account. There's pairs trading, the final frontier. This is just, again, scraping the surface. In a couple of minutes, I'll actually take you to the TheoTrade the site, and I'll show you in detail all these classes. The classes, if you started buying them individually, it's access to over $9,000 in classes alone. That's the first bonus tonight. As I said, okay, we here at TheoTrade, we've had enough of this like one-off, sell this, here's an indicator, do a little dance, make a little love, get down tonight. Okay, there's 88 classes here at TheoTrade. It's also important to know that TheoTrade, this is not like a one-man shop. This is not Don Kaufman does 88 classes. Okay, this is actually the instructors here at TheoTrade. First on the list, we have Jeff Bierman, analyst, trader, and former chief market technician for TD Ameritrade. Jeff's claim to fame, for those of you that are on Thinkorswim. Anybody here on Thinkorswim? Okay, if you're on Thinkorswim, Jeff built over half the studies on the Thinkorswim charting application. Jeff actually worked with me at Thinkorswim, and then, of course, he worked with me at TD Ameritrade. And when I exited TD in 2015, Jeff exited directly after. Okay, he's been with us at TheoTrade ever since. Jeff also has one other interesting claim to fame. He's actually a professor of finance at Loyola in Chicago. So I always tell people, you can pay $42,000 a year to listen to Jeff Bierman, which is online because Loyola is now online, or you can obviously come here to TheoTrade. Next on the list, Matt Williamson. He's our market neutral. He's a premium selling options strategist. What that effectively means, he sells premium in the marketplace, and a lot of you are probably familiar with that idea. All right, third on the list here, Corey Rosenblum. This is our senior strategist, okay, and resident swing trader. So if you're looking for a little bit more short-term swing trading, this is your guy. And of course, this could be applicable to in-out spreads, which we displayed tonight. Brandon Chapman, he's our CMT, okay, macroeconomics, technicals, and fundamentals. I'll spend a minute talking about Brandon as well. Brandon also worked with us at TD Ameritrade. In fact, Brandon, okay, worked in the education division of TD Ameritrade, and Brandon actually wrote a book, and it was a course at TD Ameritrade. Now, if you guys remember, a couple of years back, there was a course at TD Ameritrade. Some of you would know this. That course lasted 18 months. Again, there was a course, okay, at TD Ameritrade to learn how to trade. The class was 18 months long. The class cost $24,000. Brandon Chapman actually wrote the book for the course. And I'll tell you right now, okay, and he'll tell you as well, what we have here at TheoTrade absolutely smokes the education from TD Ameritrade. Because now we get into detail. We can have criteria. We're not, restricted by the Securities Exchange Commission. Next on the list, Steve Slim Miller. It's a 43-year veteran, stock options and futures trader. I've actually known Steve Miller since I'm a kid. Steve actually started trading when options started trading in 1973. He's been trading ever since. He's been with us also since almost the beginning here at TheoTrade. Last but definitely not least, Tony Rago. He's our NASDAQ futures. He's an intraday strategist. He just trades all day. In the chat room all day, firing off positions, firing off, literally what his setups are for those futures trades. So that, by the way, people, is bonus number one. And bonus number one, it's 88 trading classes, okay? They're in the can. They're ready to go. Not done yet. Bonus number 2. We're going to give you all access TheoTrade VIP membership. It's included. We're going to give you 3 months, okay, unlimited access to TheoTrade. Okay, what's unlimited access to TheoTrade? What's 3 months? Okay, well, first, we have a live trading chat room. We broadcast 6 hours a day. Okay, I know that not everybody can tune in for 6 hours a day, but we're going to give you access to the live trading chat room. Whether you want it or not, you're getting it. Okay, that's the second bonus on here. In that live trading chat room, we provide real trade ideas. All the instructors are trading, real-time market insights, and yes, we are trading live. We also do text and push notification trades, okay, including, of course, in-out spreads. We have 5 distinct trading portfolios. We have an in-out spread, okay, we do duration trades, we've got the black book trader, it goes on and on. We do daily coaching sessions with timely topics. This is continuing education sessions, okay, on stocks, options, and futures. And this is one I put the most weight into. The instructors here, and I started with this today, the instructors here at TheoTrade will directly answer your trading questions via email. If you want to know something about a trade, you email us. Within 24 hours, you'll have an answer back. You can literally say, what do you think of this? Because if that's the worst trade I've ever seen, I'm telling you, we will answer your questions via email. So when you need somebody looking over your shoulder, when you need a coach, okay, you email us. It's access to $997 of support, trades, and insight, okay? It's 3 full months. Again, you can't just take a class and be done with it. You got to be able to bounce some ideas. You got to be able to talk to other traders. That's why we put this together. So the first bonus, of course, is 88 classes. The second bonus is, hey, access to everything that we're doing for the next 3 months. The chat room, the push notifications, the portfolios to watch us trade, the capacity to get continuing education. You get to basically email our instructors and they will turn around. We don't care, by the way. If it takes us 5-6 hours a day in email, hey, it is what it is. We signed up for it, okay? We literally signed up for it. In addition to it, okay, and this is also on bonus number 2, we'll give you access to 59 proprietary indicators and scans. Everything we got. Auto expected move, okay? Gravity points, RSI Laguerre, the Quantix, NQ levels, next generation squeeze, complex position tracker, okay? By the way, the SPX expected move. Remember, I'm going to give you that one in just a minute, okay? I'm actually going to give everybody for hanging out tonight the expected move indicator, and you're going to see that, okay? But every indicator that we have, we actually give it to you from day one. All right, we don't hold anything back. There's no reason to hold back. People that hold back is because they're in the business to sell a bunch of crap to you. We're giving you access to everything we do. It's access to over $1,800 plus in indicators and scans. Okay, we do it all. And I'm not done yet. We're actually going to throw one last bonus in. Okay, and normally we would only have 2 bonuses. Bonus 1, 88 trading classes. Bonus 2, 3 months access to TheoStream. Okay, everything we do, support. Okay, tonight we're going to have a third bonus. And tonight it's because we're going to do a class. The class is coming live. Thursday, May 7th. When is it? It's next week. It's next Thursday. It's 9 a.m. to 11 a.m. This is actually going to be a 2-hour course. It's a critical course. It's volatility, okay? Back spreads. There is heavy volatility right now, and trading back spreads in the volatility has been a grand slam lately, okay? We're actually going to have a 2-hour just centric course on volatility back spreads. I am actually going to be the instructor for that. As I said, the class is live Thursday, May 7th, 9 a.m. to 11 a.m. Central Time. So not only giving you access to 88 classes, we're going to give you access to all the indicators, access to all the instructors in the chat room. We're also going to give you access, okay, to this particular class. And if you can't make it live, like we get it, the course, though, is archived immediately with 24/7 access, okay? There's download capability as well. You could download this and watch it on your mobile device. That's fine. You could do this on an iPad. You could do it on Android. Okay, you name it. Okay. By the way, if you're unfamiliar with back spreads, so now we're giving you the in-out spreads course, which is recorded, and you can start watching that tonight. We're actually going to give you an entire crash course in volatility back spreads. And if you want to learn a little bit about these volatility trades, okay, here's one. By the way, this is a little bit older one, but I like this one. It's probably my favorite back spread that I've ever done. This is actually a Tesla back spread. As I said, Tesla's not that good for in-out spreads, but Tesla's unbelievable for back spreads. This is a back spread that I actually placed in November and pulled it off in December. Okay. It was placed for a 20-cent debit and closed for an $11 credit. That, people, is what we call an absolute grand slam. It's huge. The trade was actually big enough, okay, that I really did do just this, okay, that would be mine. It's kind of what we call put your trading account in ludicrous mode. That one's mine. By the way, this also this happens to belong. That belongs to me inside of the vehicle. By the way, if you do not have a Tesla, can I just tell you, okay, you should seriously look into it, even if it's a Model 3. That thing is unbelievable. I've had cars, everything. I've owned everything. Nothing even comes close, okay? And I did it literally after the backspread on there. By the way, if you're unfamiliar with ludicrous mode, it's basically a mode that you put your vehicle in. The 0 to 60, I think in my car is about 2.3 seconds, okay? It's very amusing, okay? I've also driven a child in ludicrous mode a couple of times, but he enjoys it. That was a trade, by the way, that was done, as I said, towards the end of the year. I've only had the Tesla now for a couple of months, and this one is IWM backspread, a little bit more recent for you. Okay, this one's actually done in March. This is one put on for a 20-cent credit. I closed it for a $6.48 credit. Okay, then I come to a backspread that was literally done. Is this one recent enough for you? It was closed yesterday. So we are hitting back spreads again and again and again and again. And we felt it was essential because a lot of even our existing clientele, they're not necessarily used to, like, why is Don doing all these back spreads over here? This one's put on for a 43-cent credit, closed for $4.97. We're putting them on right now because they're working. And I'm actually going to do another like crash course in volatility back spreads because it's a little bit different in the midst of this volatility. The class, it's part of this. It's going to be live again Thursday, May 7th, 9 a.m. to 11. Okay. There's a lot going on, obviously, right now at TheoTrade. Listen, this is what a back spread looks like. Minimal risk, maximum reward. There really is minimal risk in this trade, and this thing can absolutely explode. We're going to teach you, though, how, okay, to construct the trade properly, okay, and why they work in this kind of volatility. And more importantly, you'll notice I kept doing them in IWM, why they work in certain products better than other products. Listen, TheoTrade, we include everything you need to invest in trade. Look at, we do classes, right? We do what? Classes, we do coaching sessions, email access to the instructors. There's a live trading room and live trades. There's indicators and scans. There's mobile access 24/7. It's everything you're going to need. Everything you're going to need, okay, in this business. And if there's something you don't have, email us. We'll get it to you. Listen, what we've built here at TheoTrade, we've built the Netflix for traders. You name a genre of trade. When I say a genre of trade, you want to learn about pairs trading, done. You want to do intraday trading, done. Okay, what do you think is in those 88 classes? We even have classes on psychology in the marketplaces, done. We got everything in every genre of trade. There's coaching sessions. We have 3 CMTs, okay, on our crew. Okay, CMT is extraordinarily hard to get that level of certification. We have 1 professor of finance at Loyola. Okay, we have another gentleman, okay, Brandon Chapman, that wrote a book and multiple books, but this particular book was a course that sold for what? Over $20,000 for an 18-month course. It's all part of it. Tonight, it's $297 for 3 months. Before I even detail everything in here, I also want to clarify one point because I get this question time and time and time again. And it comes down to this, okay? The $297. This is not an introductory price. This is not a membership. It's $297. After 3 months, if you want to do it again, it's $297. If you want to stop after 3 months, that's fine. You stop. You don't have to contact us. This is not continuing. You will not be rebilled. It's $297. Why do we do that? Because it's what's right. And we've been through the gauntlet. We know everything that's out there, all the different classes. Listen, this is what we're giving you access tonight for $297. It's a high probability in-out spreads class. The archive is available immediately. Okay? It's ready to go. In addition, we're going to give you access to over 88 trading classes, all available immediately on demand. We're going to give you new monthly classes. And I don't even have this in here. The new monthly class coming up, it is, all right, the backspread class. And the backspread class is the 3rd bonus, and that's coming to you. And it's coming to you on, okay, May 7th. And again, it'll be archived immediately. We instantaneously archive. We have a live trading chat room. We broadcast 6 hours a day. I kick off tomorrow, Friday. I'm kicking it off tomorrow. Indicators, 59 proprietary indicators and scans. We're going to email us, okay? Email us for trade ideas. We actually do text as well and push notification, but you can email us, bounce questions off of us. We have 5 distinct portfolios. There's daily coaching sessions, which is continued education. And again, each of the instructors, okay, will answer emails, all right? And that means 24-hour kind of turnaround time. Go right now to TheoTrade.com/IN, TheoTrade.com/I, okay? And N is in Nancy, to enroll for this. And I'm going to come back to that in just a second. I'll actually show you the page here at TheoTrade.com/in, all right? I'm also going to hand this to you. TheoTrade, we're going to make it a riskless deal tonight. Listen, this is everything you need to start trading. I mean, literally everything. If you have novice, novice to expert. In fact, I think this is a good time to actually bring it up, and I'll pull this up again a little later. But may actually pop this in here so everybody can see it. But by the way, this is TheoTrade. We say you could be an absolute novice in here. All right. We have a Start Here menu. You know what Start Here menu is? If you're an absolute novice, you've never traded before. Options 101. Okay. Options 201. We built, okay, everything you're going to need from novice to absolute expert. And if you're an expert in trading, okay, believe me, we have courses that are going to take you to entirely new levels. I'll show you guys this in just a minute. I don't want to step ahead. Tonight, though, we're going to make everything a riskless trade. We're just going to give you a money back guarantee. Okay. And we do this, and I want everybody to know right now, we are talking about a whopping $297. It's $297 for 3 months. Okay. If you're not completely satisfied in the next 3 months, just email us, support@theotrade.com. Provide us the details of your trades, receive a full refund. By the way, we do not define what satisfied happens to be. Because quite frankly, come on, it's $297. Okay. We have and have done this, okay, to make it a riskless trade tonight. We've done this to make it a riskless trade tonight, okay, to make sure that everybody is going to be happy with TheoTrade. There's a money-back guarantee stipulations. I love this one. You got to do 10 trades using the in-out spread criteria in the next 3 months. Your initial account value has to exceed $2,000, okay? You have to follow our criteria. You have to follow TheoTrade criteria. I think that these are fair, okay? You can't just make stuff up and go, I did not do well. Listen, I'm telling you right now, in the next 3 months, we will do more than 10 spreads. You can follow our trades, okay? If you're not satisfied, you get back your $297. Again, we do this to make it easy. We want clientele, okay, that are happy. Right now at TheoTrade, as of tonight, we're going to have over 5,000, okay, 5,000 clients at TheoTrade. You got to follow our in-out spread criteria. And by the way, you have to actually make these real trades. You're not allowed to do paper trades. This ain't paper trading, people. In the next 3 months, if you do 10 trades, okay, that are real, and you're not satisfied, we'll give you back your $297. And again, we do that to make it completely and totally riskless and make it easier. And just email us, support@theotrade.com. Listen, get into TheoTrade now. We're going to work with you directly. Tonight, there are 30 spots on the TheoTrade riskless deal. We do 30 spots because we have to go back in and reconcile every one of the trades. So each one of you, okay, you got to do 10 trades. We have to reconcile, okay, those trades. So we give you 30 spots on the TheoTrade riskless deal. Okay, obviously it's a matter of trade size. We have 5,000 clientele. We'll be able to look over 30 different individuals, and we'll be able to look over your trades. Okay, again, we also give you unlimited email mentoring. That's important to me. After tonight, you need to get a hold of me. Just go to support@TheoTrade. And by the way, it's the same email address. We use a common inbox here. Support@theotrade.com. Put Don in the heading. It will get to me. But we'll give you unlimited email mentoring. Send us your trades. The $297 offer has never been available before. Okay. In addition, again, we have that third bonus of a brand new class coming out next week, specifically on volatility back spreads. What our members are saying. This is actually from Brian. It's on March 16th. Don, wow. I want to again say thank you for what you've taught me in the last 2.5 years. I bought into what you taught about risk twist spreads and duration positions, okay, and started to trade options almost a year ago. I missed out, okay, on the last of the market move up. So we missed out on the bullish market. Okay. But at the moment, my IRA is up 14.8% for the year. Now, I just want to detail this because this is March 16th in the middle of a crash, people. And that's why I put this email up over here in the middle of the crash. This gentleman's actually up 14.8% for the year inside of the IRA. What I've invested in TheoTrade has been so worth the money. Thank you. And this one comes from Brian. By the way, I'm going to answer all of your questions here momentarily. This is Chris on March 26th. I've learned more in the past 4 weeks managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned, okay, would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting out of my long-term IRA destruction, okay? You clearly don't have to be a teacher, but thank you for doing so. Stay safe. This is actually from Chris. Again, just detailing everything we're actually providing tonight. And of course, we have the third bonus on there. Okay. If you go right now to TheoTrade.com/IN, I'm going to take you there here in just a second. It'll detail everything. The bonus is tonight. Okay. 3 months, all access, VIP, okay, into TheoTrade. And again, it's 6 hours a day. Everything is archived. By the way, you can go back into the archives and watch everything you can. And if you have a mobile device, you can actually download the archive and watch the archive at 1.5 or 2 times the speed. So we actually have variable speed in the mobile application. It's kind of a nice feature in there. Okay, we have trading indicators, text and push notification of trade ideas, daily coaching sessions. The second bonus, of course, we give you 88 classes in day trading and swing trading and technical trading, beginners options trading, advanced options trading, and new monthly classes. And again, tonight we're going to have a third bonus. And the third bonus, once again, is the Volatility Backspreads course. In fact, I'll just show you the main site here momentarily. Again, if you would please go right now to TheoTrade.com/IN. And the reason we're going to bring up this site here momentarily is because, well, first of all, the indicator that we talked about this evening, which is the SPX expected move indicator, happens to be, the link for that happens to be at the bottom of this page. So let me once again throw the web address up here and see if I can pull it up over there. There we go. We are at TheoTrade.com/IN as in Nancy. By the way, we have support in here if you need help. This is just live chat built into our room. Now, this is the SPX expected move indicator for Thinkorswim. For those of you, as you enroll for TheoTrade, you don't have to go to this site to download this. We have everything you're going to need. We will help you download the indicators. Okay. Tonight, click right here. It's $297. I want to reiterate once again, this is not a membership. There is no additional billing over here. In fact, when you click add to cart, and I'll take you onto the registration page, okay, it's important that you know, once again, it's $297. Okay, obviously we need some information over here, payment information. Again, this is not a reoccurring charge. It is a one-time charge. I also want to reiterate once again before I let you go off this page, and then I'm going to answer some questions. Okay, the guide to small account growth with in-out spreads. You can watch that tonight. Okay, currently it looks like there's 30 spots left, but obviously people are enrolling for it right now. I'll tell you how many spots are left as we go along over here. We're also going to give you the bonus class, and this is the third bonus tonight. Okay, this is the Volatility Backspreads class, and it is an emergency because these things are working. They're working great to hedge portfolios, but more importantly, they have given us phenomenal upside. So again, the guide to account growth with in-out spreads, that's what we talked about predominantly tonight, but I also feel really strongly about this third bonus, which is the Volatility Backspreads class. That's going to be May 7th. And again, I'm the instructor. It's going to be a 2-hour class. We're going to brush up on Volatility Backspreads. Everything tonight is $297. And again, I am now going to take you over and answer some questions. Okay. Again, this is TheoTrade.com/IN. If you have any trouble remembering some of the bonuses that we've discussed tonight, they're all directly on this page from bonus number 1, number 2, and of course, number 3 being the additional class that we're going to put in there. With that, let me actually show you, you know what, before we go in some of the questions, let me actually show you a little bit of TheoTrade. So again, it's TheoTrade.com/IN. This is TheoTrade. This is actually the chat room. and we broadcast up here, meaning that this turns into my screen. You can see everything that I'm doing, like looking over our shoulder. Down below in here is the actual room where clientele are talking to one another. You get to pick a name in here, chat room handle, okay? Everybody is discussing in here. In a given day, as I said, tonight we'll have over 5,000 clientele here at TheoTrade, but in a given day, there are over 4,000 individuals in this particular chat room. It's pretty hectic in there. It gets a little crazy from time to time. It's wonderful. Everybody shares trade ideas. We share trade ideas in there. And of course, you can not only hear us, but you can see our screens during the trading session. So that's obviously the chat room. Again, the Start Here menu, this is where you start if you're an absolute novice. Even if you know what you're doing, you're going to want to watch stuff like Options 301, Volatility Skew and You, okay? Order execution, part 1, part 2, part 3. This is a full-blown class on just how to send the trades properly, okay? I'll tell you right now, every single one of you watch order execution, you're going to save more than $297 in a month if you watch the order execution class, okay? Getting your risk under wraps, risk control and hedging ideas. Love some of the topics in here. Next, I actually want to show you the classes. As I said, TheoTrade, it's like the Netflix, okay? The Netflix for traders. We have option strategy classes, option newbie classes, technical analysis. I know, did I leave out charts tonight? It's okay, because we have 3 market technicians on staff, okay? Day trading classes, stock classes, futures classes, hedging strategies, okay? Trend trading. We've even got intraday classes, and I don't want to leave that out, okay? Pairs trading, mindset, okay, which is psychology classes. What do one of these look like? Like under option strategies. A lot of the option strategy classes, this is me, okay? That's my area of expertise. Then we have somebody who's an expert in technical analysis, another one in fundamental analysis, okay? These are a couple of the classes. Butterfly's Guide to Weekly Returns. You have access to all of this. Option Greeks, okay? Strategy Week, in-out spreads, okay? How to collect income being short, selling options for a living, Guide to Maximum Edge Trading Earnings. Here's a volatility crash course. That one's really new. When you go to a class, simply click on the class. Okay, you want to go to a class? Let's go to one. We're going to a class. Okay, this is an emergency volatility crash course. Sorry, it started playing on me there. The slide deck with all the criteria is right here. You click to download. I wanted to show you how recent this class happened to be. Listen, it's volatile. We just did this class on April 23rd. Okay, that's how recent this particular class is. All of this is available here at TheoTrade. And that's just a quick, brief tour. One thing I forgot. Okay. You can actually search our entire archive. This is like the Google of trading. You can come in here with any topic you want. Like, I was talking about in-out spreads, in-out allocation. I was talking about in-out spreads tonight. So let's search. Every single session that mentions in-out spreads will be pulled into here. So everything you want to know about in-out spreads and then some. All right, let's go back over here again. It's theotrade.com/IN. I want to pull that up one more time. theotrade.com/IN. Here's where I am going to answer some of your questions. I'm going to leave this up here for a moment. Actually, I've got the web address up here. I'm going to answer general questions, and then I'm going to answer specific questions. By the way, I love what somebody just said in the room. Okay, there's so much. It's overwhelming. Okay, I promise you, you're going to find an area, okay, a genre of trade. I tell almost everybody, if you're interested in the options, start with in-out spreads. Okay, that has been by far and away the most, I don't want to say prolific class, but it's been a class that it's where you get your consistency. It's where you get your feet wet. And if there's one class, I'll tell you that you can't live without, it's the in-out spreads class. From there, okay, people are like, well, where do I go then? Right now, back spreading is huge. And there's several different types of back spreads, which I'm actually going to cover next Thursday on May 7th. So let me answer a couple of these questions over there, and I appreciate that. By the way, Yuri was saying, does the special also include daily trades? Absolutely. We fire trades constantly. Constantly. By the way, don't get upset at me. You're going to come in here one day, I'm not going to trade. And then 2 days from then, I'm like, I did 4 trades in one day. You're like, I missed that day. Don't worry about it. Okay? Trading, it is what it is. So, I love this. Somebody says, is there a class on VXX and VIX? That's exactly what the crash course in volatility is. Okay. We just did the class April 23rd on VXX and VIX. Trust me, no one in this business is more suited for VIX and VXX than myself, because those are the products I started in. I mean, I traded SPX, OEX, okay, and it's all about volatility in the VIX. That's kind of my expertise in this business. So I love that one. Let me get to some of the general questions in here. And again, what do you need to get started here? You need a laptop and internet connection. People always ask that question. I'll tell you what, a lot of the time now, you don't even need a laptop. Use an iPad. I just bought another iPad the other day and had it delivered. The cheapest iPad I could get for $297, and I've been trading on it for like the last week. I love trading off of the iPad. I've done it. I just trade a lot off my iPad. But you can also watch all the classes and everything off of any type of mobile device. So we've got everything you're going to need from novice to extreme. The second point, and I always like to make this point because people get very concerned about it, and rightfully so. This is not a gym membership where you can't get out of it. It's not even a membership at all. We don't do auto renew anymore. And we don't do it because we know people don't like it. And I tell you why? Because I don't like it. I don't like when people bill my credit card for $297, okay, continuously, because I'll forget crap. It's $297. It's a one-time charge. If you don't like it, that's fine, okay? I want you guys to realize something. After 3 months, okay, it doesn't go up in price. After 3 months, it's $297. You want to do it again after that? You decide at that time it will be $297. We do that, again, we don't want anybody here that doesn't want to be here. And we have 5,000 people here now, so we think that that's probably the right model. I know, some people are like, well, gym membership it's horrible, okay? Especially when the gym membership charges you when the gym is closed. We're never closed, okay? Number 3 over here, we archive everything. Literally every minute of every second of every trading day, we archive everything, every class. You can't watch everything that we do. That's okay. It is overwhelming. And I think for whether it's $297 or $2,000, I think you guys would rather be overwhelmed rather than underwhelmed. And that's, we'll give you everything, okay? Number 4, we'll provide you access to TheoTrade Mobile. And you can actually download those archives. So if you can't watch it live, you can watch the archives. You can watch them at your leisure. You can even play it back at, again, 1.5 times. I already speak fast enough. Number 5, you can email us anytime. Receive a response within 24 hours, and including trade-related questions. Listen, I want to detail this for a second. Trade-related questions, okay? Let's not hide behind any garbage here. If you ask me a specific question about a trade, okay, I might not know. People email me all the time. Where is Microsoft going? I'm like, I don't know, man. Do an in-out spread, okay? I don't mind saying that. And if I do have an idea, like, hey, kind of feel like it's a little bullish or a little bearish, I'll tell you. We don't hide behind anything, okay? This is trading firm. We realize that you people are trading and that there's real money on the line. Listen, number 6 over here, you're going to gain access to every course TheoTrade has done in the previous 4 years. Everything. We give you classes, coaching sessions, live trading sessions, everything that we've done for 4 years. Okay, name a trading topic, name anything. We've got an archive on it, guarantee. Okay, we went out of our way to hire instructors. By the way, the instructors here at TheoTrade, they are traders that we put a microphone in front of, period. Some of them are a little rough around the edges, okay? Maybe even a few fries short of a Happy Meal, but these people can trade, and that's what's important to us, okay? Number 7, all the trades that we've talked about tonight can be done inside of an IRA or retirement account, and you do have to have a $2,000 account, but that's it. That's the only requirement here. You have to have a $2,000 account to be able to trade options. That's not my rule. That's not a TD Ameritrade rule. That's not a Charles Schwab rule. That's actually an SEC rule, okay? Number 8, we can help you get approved for options at all the different brokerage firms. So I've actually, one of my closest friends, she works at E-Trade. She's actually far up the food chain at E-Trade. Obviously, I'm friends with a lot of people over at TD Ameritrade. My right-hand man that worked with me at TD Ameritrade, he now actually runs part of Charles Schwab. It is a very tight-knit community in the trading environment. We know people, obviously, at Tastyworks because I worked with them for years at Thinkorswim. It just goes on and on. Listen, remember, tonight there are 30 riskless trade spots available. There's not 30 anymore, but I'm going to take you through those in just a minute. Listen, tonight, just get, the riskless thing, okay? We make this as easy as possible. Just get results, take action. You guys are going to love what we do here at TheoTrade. And I tell everybody that, and you don't believe it until you actually go in there. You're like, wow, this is, it's the full Monty for trading in here. Now, I'm going to answer a couple of more generalized questions in here. Again, it's theotrade.com/IN. Oh, I wanted to throw this up here too. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. That one means a lot to me because that was the design here of TheoTrade, not to be a membership, not to upsell. It's $297, okay? I'll throw this one up over here. Don's the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of how the markets works is like sitting next to a finance PhD. Highly recommend learning what this man has to say. With that, let me actually pull up, again, I'm going to pull up the page and I'm going to answer some generalized questions for everybody here because I want to get to everything that's in the room. Again, there's the address, theotrade.com/IN. Just click add to cart. Let me actually get to some of the questions. Oh, before I do that too, I want to thank those that have enrolled. I'm going to tell you right now, there are 3 riskless spots left. Those that enrolled: Ralph G. from Texas, Aaron B. from Pennsylvania, James K. from Nevada, Jerry W. from California, David K. from Kansas, Jose E. from Arizona, Robert F. from California, Ed H. from South Carolina, Trip B. from California, Hugh from Australia. Oh, I've lived in Australia. Okay, by the way, if you're an Aussie, okay, or a Canadian, email me. We'll actually give you a little tip on brokerage firms to use, whether you're Australian or Canadian. We'll help you out on there. John Kuhn from New York, Larry G. from Iowa, Julie from Alaska, Bruce B. from California, David G. from Minnesota, Angela H. from California, Alan W. from Arizona, Rich J. from California, Kenneth I. from New Jersey, Kevin A. from Indiana, Arthur M. from Nevada, Bruce M. from Pennsylvania, Patricia P. from Arizona. You got a couple of Arizona people in here. Michael M. from Florida. I cannot pronounce this. I'm not going to butcher it, from Florida. Dale W. from Tennessee. Richard C. from New York. Again, there's 3 riskless spots left on there. Try to read those as fast as I possibly could. Let me get to some of the generalized questions in there. You know what? There's a great question that just came in. Is there a pre-class study material for May 7th? No, but what I do tell you, okay, coming in on May 7th, understand the basics of options. Go through options 101, options 201. There's nothing specific for the May 7th class. You do have to understand some options knowledge because otherwise you're going to feel like you kind of get thrown in the deep end of the pool a little bit. I like this one too. Whether you're right or wrong, you still make money, okay? Now, there's going to be a variety of different strategies that we teach here, and you are going to see me at times. I don't mind saying this. I will absolutely take directional bias. There are times when I want to be, bullish in the market. There's times I want to be bearish in the marketplace. But we have, a large number of option strategies keyed around trade logic, which is we're not putting emphasis on directional bias, okay? And no, there's a lot of strategies that we teach here that are not about directional bias, and it's not imperative that you be right per se to make money. All right. Can I apply this to futures? Well, we have an entire futures crew here. Corey Rosenblum and Tony Rago are our resident futures traders. The futures, though, you can absolutely trade this in options on futures. Get that question constantly there, okay? Just constantly we get that questions over here. And yes, you can trade futures. By the way, we're all fully versed in futures trading. Stocks, options, futures, you name it. We'll trade it over here. Okay. All right. Do you ever get out of smaller losses than 100%? Absolutely. So that's just a question. Like when you're going out and you're risking $1 to be able to make $1, do you ever bail out with losses, okay, and not lose the full amount of the spread? And the answer is yes. And it'll actually detail that specifically in the in-out spreads course. So that's fair game, but that's actually part of the criteria. At what point do you actually pull the ripcord and say, that's it, I'm a loser, okay, I'm a loser? And you're actually going to find out, interestingly enough, in volatility, okay, things get crazy, okay, crazy. It's a little harder to define your risk at that time. Oh, somebody actually asked a great question. How do you pick the stocks to do an in-out spread? Well, initially, feel free to jump on our trades because we'll do a bunch of in-out spreads. But how do you actually pick the stocks? There is a very finite list that we use here at TheoTrade, okay, of the most liquid products, and that's going to help you in your criteria for selection. Moreover, again, you're going to find a very small universe of stocks that we just trade again and again. If you looked and saw some of the trades that I did, you saw the QQQ and you saw the IWM, and you're going to see the spiders a lot, and you're going to see the apples, and okay, and you're going to see Teslas. Okay, you're going to see the same stocks here again and again and again and again. And people are like, oh man, can I trade something different? My answer for you is, what are you here for? To make money? Okay, or to learn 50 different stocks? No, you're here to make money. And you're going to see me trade. Like, I have a very small team of products that I trade. Okay. Next question, do we have to have a margin account? Absolutely not. You could use technically a cash account, or you could use an IRA. That's fine. Okay, that is absolutely fine. Oh, somebody actually asked another great question here. What's your win rate, okay, on the in-out spreads? So there's actually there's a huge amount of data that we put together on all the in-out spreads that we've done, but we also, okay, put together a Monte Carlo model for those of you that really want to geek out. If you're like an engineer or you understand Monte Carlo modeling, okay, the in-out spreads, depending upon the type of in-out spread, okay, the win rate is anywhere from 62 to 73% probability. And it depends the type of in-out spread that you would actually construct. But you're right around, okay, again, 62 to about 73% win rate on in-out spreads. Okay. Somebody said, what about iron condors? Yeah, you know what? Iron condors right now are not in play, but we obviously have a highly detailed class on iron condors. Do not trade those right now. I don't mind saying that right up front because people email me all the time. What about iron condors? Do not trade iron condors right now. You will not make money. You will lose money in those strategies. In fact, I don't have it up right now, but I am buying iron condors in one account. Oh, here's another fun one too. How far out are your typical days to expiration? So that is one, say, sir, that you were going to learn in the class. I'm not giving you all the criteria. It actually tells you precisely the number of days to go. It says I'll tell you right now, from 9 days on out to X. Okay. You go too far and the trade won't work. Okay. All right. So let me see. Okay. Why did you choose the downside on each? This is a great question. You saw a lot of trades that I did tonight, and many of the trades I did tonight were bearish. Okay. I didn't select the bearish trades because I was bearish. I put on the bearish trades because they were pricing better. And it's something actually we teach called skew. In fact, that's going to be taught quite extensively in the upcoming class on May 7th. Skew is defining what we're doing right now. Skew has a lot to do with options trades, and it's what they call implied volatility skew for those of you that understand that. Okay. By the way, you do not have to be a mathematician to do well with this, I promise. I am not a mathematician. I still wake up in the middle of the night once in a while screaming, in pain about statistics classes that I took over 20 years ago. So, all right, continuing on over here, a couple of the other questions. Okay. I like this one. Isn't this too much information? I hope so. I hope so. Listen, our site is, and I say this to everybody, overwhelming. And there's a huge amount on TheoTrade. Okay. You're going to find a genre of trade that you like. Need you go through everything? Absolutely not. Okay. I mean, it's like literally like an archive as deep as something would be on Netflix. There are literally, okay, 4 years. There's 252 trading days in a year. We have 4 years of archives in there for 252 trading days a year. Okay. It's massive. But we wanted to build, okay, a structure here at TheoTrade that could take somebody that's never even talked or even heard about a stock, ramp them up, okay, into the most extreme. If you want to go that far, go that far. Okay. That's fine. And when I say, the extreme, even down to like psychology of trading, there's nothing you need outside of TheoTrade. And that's the most important thing to us. By the way, Tony was saying, can we paper trade for practice? Absolutely. Okay. Absolutely. And you can log in tonight. Ken was saying, can you log in tonight? Yeah. What happens is you're going to enroll for it. You click add to cart. You fill all the information out. And it'll be, well, there's a lot of people enrolling right now. Okay. It'll be probably 15 minutes before you're actually going to get the username and password back based on all of that. Okay. So, yes, you can absolutely log in tonight. Yes, you can paper trade. Ken already said he received his credentials. Ken, you must have been early in getting enrolled for that. By the way, I want to thank, there's only one riskless spot left. We just had Craig F. from Washington and Dan W. from Arkansas. Thank you guys. By the way, thank you for everybody that's enrolled, obviously, this evening. So that was quick that you received your credentials already. So yes, you could definitely paper trade for practice. Okay, Rex, you also received credentials. Good. It usually takes about 5 minutes, but a lot of people are hopping in there tonight, which will slow us down because we reconcile everything in terms of those credentials. Again, I want to thank everybody for joining us tonight. I really hope that I answered almost every question that you have. And please know that you can email us after this evening. Okay, just come right over here. It's support@TheoTrade.com. Put my name in the heading if you want to get directly to me. If you just have a general question about TheoTrade right now, we're here. We can answer it live on chat, but support@TheoTrade.com. That's predominantly for trade-related questions. You want to get a hold of me, okay? Do it. Again, I want to thank everybody for coming out this evening. Again, it's TheoTrade.com/in. I am going to start tomorrow morning. It's Friday morning. I start, okay, at 9:22 Eastern Standard Time. That's when I go live inside of the chat room. So by all means, if you want to come in there tomorrow, say hello. Thank you guys very much for joining us this evening. See everybody tomorrow live in the chat room. Have a great night, everybody. Bye-bye.